I need to hold on or sold and book profits?
Okay, this is MTA Tech that you're talking about? Okay, all right.
Yes.
So if I'm not wrong, you're currently sitting on profits of over 1 lakh rupees, 1.6 lakh rupees.
Yeah.
Okay, and this is the short term, you bought this from a short term perspective, or when did you buy it?
Yeah, for short term perspective.
Okay, all right. Ruchit, he's already sitting on gains of over 1.6 lakh rupees. What would you recommend on MTA Tech?
So post the recent run up, the stock is in a overbought zone. So usually in such overbought zones, it's wise to take at least some money off the table. So I would suggest to book partial profit at least over here. The immediate support base for the stock is now around 6,400 rupees. So on the rest of the positions, you can keep a stop loss below 6,000. But yes, some money should be taken off from the table over here.
Got that view, Ruchit. Stocks up 200% just in this year itself, and we had the management yesterday on India Market Open where they're penciling in an 80% growth, but even then the stock's very, very expensive. So last year up 3.6 times, up 2 times in just this year itself as well. But hopefully, Mahinder, that answers your question as well. The next caller actually is coming from Chennai, and Rajalakshmi has a stock query for us. Rajalakshmi, very good afternoon to you. What's your query?
Good afternoon to you also.
Good afternoon, Rajalakshmi. Go ahead. What's your query?
Yes. I'm holding South Indian Bank, 4,550 shares. My average price is 27 rupees.
Okay.
I would like to know whether I can sell this, buy Federal Bank or Bandhan Bank.
Okay, and this would be all from the long term. Rajalakshmi, you are okay to holding on for more than a year, 2 years?
Yeah, it's more than I'd been buying it since it was 5 rupees.
Okay, that's great. So you are sitting on good gains right now.
Mr. Seshadri is moved out of South Indian Bank. I just wanted to know whether it is for holding long-term purpose.
Got it.
It will be work better. That's it.
Well, pertinent question, Rajalakshmi. Radharaman, would you recommend between Federal Bank as well as Bandhan Bank, I think what she was asking on, and switching out of South Indian Bank? I think the earnings for Federal, of course, much better than South Indian Bank. So is that one of the preferred picks, and your view on Bandhan as well?
I think she should switch from a South Indian Bank to a Federal Bank. I think that will be a good, wise move to do that, not Bandhan. I would maybe look at a Federal Bank more positively, and a switch from SI Bank to Federal is a good advice.
Okay, time for a rapid fire round. Ruchit as well as Radharaman, try to keep your answers as short as possible. The first one is on Tips Film. Our viewers bought 110 shares at the levels of 460. This is Puneet from Bengaluru. Ruchit, your view on the charts, hold or sell?
Hold.
The next question coming in now, it's on the water management space. So Radharaman, any of these stocks, Eon Exchange, VA Tech Wabag, anything that you like from that space? That's the question Varun is asking.
I think Bag is still a better company in that space, but maybe the valuations are a bit stretched. So as of now, I'll hold it.
Okay, Gale bought at the levels of 183. 2075 stocks is what Murugan from Tirupati is holding. Hold or sell, Ruchit?
Yeah, should continue to hold.
K Fintech is the other one. Raj from Visakhapatnam is holding on to shares at 1060. Ruchit is holding 7,000 shares and asking what he should do with this counter. Is it a good time to average? Should he reduce his position a little bit?
Take a sell on rise approach. Any pullback moves, if comes, take that as opportunity to sell.
Okay, fresh entry in Sirma SGS from a long-term perspective right now makes sense. Radharaman?
Yes.
The next question coming in is regarding Vedanta. Our viewer just bought 100 shares after the demerger. Radharaman, should he continue to hold?
Yes, continue to hold.
Cenoris Pharma, a fresh entry right now from a long-term perspective. Does that make sense? Mayur wants to know. Radharaman?
Yes, it can be added at this price.
Got it. Sriram Raghuram from Chennai is holding on to 100 shares on Nazara Tech at 179. There's a block deal that happened today. Let's pull up that counter, and hence it's up 11%. Is this a good time to exit, Radharaman?
Yes.
Samman Capital bought at the levels of 150. 500 shares is what Arni Agnihotri has been holding. From a short-term perspective, what are the charts indicating, Ruchit?
Range-bound stock, 135 is the support. So keep stop loss below 135.
Kapoor bought into Coforge at 1493. Ruchit, is it a good time to average? Does the chart suggest that?
Yes, can average at current levels. The downside seems to be limited from here on.
Okay. Is it the right time to enter NSDL from a long-term perspective? Bhavani from Chennai is asking. Radharaman?
Yes.
On SCI, what would you recommend, Radharaman? I mean, it was expected to be divested and not yet. So what's your view on the stock now? Is it worth holding on to?
I think worth holding on.
PNB Housing bought 100 shares at the levels of 900. Book profits, or is there further upside? Ruchit?
Hold for further upside.
Vivek from Chennai wants a view on Central Mine, which is of course one of those subsidiaries of Coal India. Radharaman, should he continue to hold this counter?
No, I should exit.
Okay, Geo Financial bought at the levels of 276, sitting on a 15% loss. From a long-term perspective, continue to hold, Radharaman?
Yes, we continue to hold.
A technical view on Cohan's Life is what Gaurav is asking Ruchit on this counter. It's seen a 58% fall, then a 20% rise because of management change. What's your view on the charts now?
Avoid fresh buying over here. Support is around 400 rupees.
Got it. Well, that's the end of the rapid fire as well as this edition of Ask Profit. Ruchit as well as Radharaman, thanks so much for helping us solve all those stock related queries over the last half an hour. But viewers, out of time on this edition of the show, stay tuned. India Market Close comes up next.
केसरिया से मन जोगी हुआ रे, दिल झूमे देखो मतवारा हुआ रे, केसरिया से मन जोगी हुआ।
हर पल मनाओ केसरी त्योहार। विमल, बोलो जुबान केसरी।
India's unshakable news habit. NDTV.com is India's #1 English news website. Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, value investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices.
And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information blitz into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market watches. Watch Sharad Dubey on Know Your Company, a show that puts the most traded stocks under the scanner. We dissect the company so that you, the investor, don't have to get the management to answer questions relevant to you. Watch Know Your Company weekdays at 11:30 a.m. to understand your next big bet. New year, new power panel, India market open, now in its boldest lineup. This is where the trends get tested and stocks get conviction.
I'll recommend a buy call on a stock only when I'm fully convinced on the stock. With a table-thumping buy.
And when the street wants the levels, he brings the chart.
Charts speak the truth, and I deliver the levels with no frills.
Parag Thakkar and Kush Bohra are now part of the morning crew with Tamanna, Neeraj and Alex. Same show, sharper voices. Every morning on India Market Open, your favorite market show just got better. On NDTV Profit, for your profit.
Welcome. You're watching India Market Close. Markets have fizzled out, truly. Look at the Nifty, and we'll pull up the intraday right at the start. 23,700 looks very far away right now, towards the low point of the day, but not yet dipping into the green. Clearly, momentum not holding on as we're going into 2 days of a market holiday. That's the Friday problem that the markets always face. I want to pull up the heat map for you and just give you a sense of what has worked and what has not, because it was a decent start to the day, a nice bump up in the mid of the day, but of course we seem to be moving down, and it's metals and crude sensitives which are showing that impact. Look at Hindalco, Tata Steel showing some pain there, and RIL also dragging down, and that's the heavyweight which is really putting in the pressure. Alex, M&M, another one, State Bank of India, all of the heavyweights really hurting today, weightage wise is what I mean, and which is why even a Tata Motors PV, which has had smooth sailing with a 6% uptick, has not been able to help the Nifty.
Yeah, absolutely. It's all about the weightage. In fact, we should drive home that point by looking at the contributors chart, because that'll just show you how much Reliance Industries is weighing. It's going to be the biggest weight on the downside. There you go, 38 points. And in a market that's not moving a large amount, it's quite a bit, right? So it's accounting for a good 40% or 35% of the total. Infi, for once, is actually up in the green and leading the gainers. Bharti Airtel continues to move higher based on what we saw earlier in the week. So it's a good picture. Why don't we also pull up the sectoral heat map? Because that would have shifted a tad bit over the course of the trading day so far. You have media that's up about 2.3%, but really it's IT coming back from that 2+% drop that it saw yesterday. Nifty, FMCG, pharma, as well as healthcare doing okay. Private banks are just about ending the week on a soft note, a third of a percent, but you'll take it on the back of yesterday's move.
I agree. Defense and metal have been your weak one since this morning. What's really dropped is the Nifty PSU Bank. I wonder if we can pull up that intraday, because all your energy, realty plays were soft through the morning. But there you have it. This is where the slide has also come. And SBI is one of the stocks which has been falling over here and shown some pain points. Let's pull up the advanced decline ratio line graph as well if we can, and you will see the kind of chart that we have looked at through the day. It just really, market can't make up its minds. As of this point, the bears are on top, and definitely that pain point coming in. Should we just quickly look at the top gainers and losers in the broader markets as well and see what's been happening there? Sheila Foam, the management, spoke to us. They're seeing good. It's cooled off, but they're seeing good demand, and despite high prices coming in, they're saying that they'll manage to sustain. MedPlus Health looking fine. Chambal Fertilizers, again, good set of numbers. United Spirits
also reacting to numbers, yeah.
Yeah, so is Hoodco for that matter, and Muthoot Finance, the company you spoke to today.
I did.
Alex, and they are really getting punished today.
More than anything
down.
else, I think it has to do with the fact that they've seen a significant churn in their customer book, and people at the lower end of the spectrum are actually moving out. So that's something that they're seeing as well.
Yeah. So here are the big factors this afternoon. Nifty has seen a range-bound trading session, finding support around 23,700 and resistance at 23,850. Cash market volumes are down 9% compared to yesterday. Only a decisive breakout above 23,800 could open the path towards 23,900 and then hopefully at 24,000 as well. Given the weekend, traders are avoiding large positions. Metals are seeing profit booking after strong flows for 2 straight days, so that's what's happening there. IT is among the top gainers owing to short covering. The Bank Nifty continues to trade below key moving averages. Resistance at 54,300, 54,600 and 55,000. Support at 54,000, 53,800 and 53,400. Let's just look at crude prices. That's another important one to track at 109. This is also possibly why you're seeing Indian markets wobble a little, 3.5% up right now. There was a hope something perhaps more concrete could come out of the Trump-Xi visit. It's not happening yet. It's a bit of a simmer, I suppose. Crude back at 109. Kunal Shah, Senior Technical and Derivative Analyst, Mirai Asset Share Khan with us on the show, as is Avinash Gorakshakar, Founder and Head Research at Avinash Mentor Research Services. Welcome to both of you. Very good afternoon. Kunal, I'm going to start with your take on the charts. Absolutely no staying power on the Nifty, right?
Good afternoon, Tamanna. Good afternoon to everyone. Yeah, I think definitely the breakdown what we had got around that 23,800 mark, we have not been able to sustain above it. And clearly, if the follow-up move continues in Monday's trading session and we break the low of 23,400 on the downside decisively, then probably we'll be heading towards filling that gap of 23,100 on the downside. So overall, the structure still continues to be as a sell-on rise mode till the time we don't surpass 23,800, 850 decisively on a closing basis and sustain above it. Now, Bank Nifty has already witnessed a sharp correction, and even for the Bank Nifty, the gap area is still to be filled around the mark of 52,800 on the downside. However, the Bank Nifty correction has been very sharp, so you might have some sideways consolidation here. Until the time Bank Nifty doesn't breach again 54,500 on the upside, which was the breakdown zone, the view continues to remain as a sell-on rise mode even for the Bank Nifty index. So both the indices, the weekly close is going to be negative for both the indices, Nifty and Bank Nifty. And Monday's follow-up selling pressure could see further downside for Nifty towards 23,100 and for Bank Nifty towards 52,700, 500 on the downside.
Okay, so that's the index view, but what's the view on individual stocks? What are you liking?
See, I think I have two ideas, one on the buy side and one on the sell side. First, I'll discuss the sell side idea here. The stock which is there on my radar on the sell side is ICICI Prudential. Already the stock has been trading in a downtrend, and in today's trading session, we have got a consolidation breakdown into the stock as well. So there might be follow-up selling pressure coming on the Monday's trading session. So that is a sell for me with a stop loss of 552 and keeping a target on the downside towards 525, 520 on the downside. So that is the first call which is there on the sell side. The second is what I'm looking on the buy side over here is Arvind Limited. Already in this week only we had got a breakout into the stock post results. Now it has been consolidating at the high level, and I am expecting it a further up move on the upside. So Arvind on the cash front is a buy for me, keeping a stop loss of 432, looking out for targets of 480 to 495 on the upside.
Okay, some quick news coming in before we go to Avinash. VAT on ATF, that's aviation turbine fuel, has been cut down in Maharashtra. It's some relief coming in. Ram Mohan Naidu, who's the Union Minister of Civil Aviation, has said that the ministry has been engaging with state governments to reduce this VAT since some time, and specifically during crisis. He's thanking the Maharashtra government and the Chief Minister for rising to the occasion. The VAT cut in ATF is from 18 to 7%. So a huge relief there actually for airline companies. Want to just pull up what's happening to Interglobe? Yes, you're seeing that spike over there. Let's pull up a SpiceJet also very quickly and look at what's happening there. You've seen a bit of a uptick there. But Maharashtra is not the only place where they fuel up, so you're going to have a little more relief. It's clearly going to be, you take a bit of pain, we take a bit of pain, state government, center government, consumer, everyone's going to have to tighten their belt a little, because we've been given that 3 rupee petrol diesel hike. That's part of it. And then, of course, oil marketing companies take a bit of it, and so does the government. But let's just go across to the stock of the day. Tata Motors PV, undoubtedly the stock of the day. This after a Q4 profit drop of 32%. Puneet, what's working for Tata Motors PV? Because the numbers on the face of it wouldn't have justified this kind of a rally.
Well, most certainly. I think it's the estimates that were so beaten down at one point of time. And with this quarter, that you're seeing that even with a 30% drop, as you rightly mentioned, stocks up 5%. But the story is not as clear. So what we are putting in focus is, of course, comparing the numbers with the estimates. Of course, there was a slight dip compared to the estimates in terms of revenue. The EBITDA as well as the profit number is also the key one. So the estimate was that of almost just 8,900 crores. It's come in much, much higher than that. 8.2% margin was the estimate. It's come at 10.7, hence the beat there as well. And profitability also, estimate was beaten down of just 4,300 crores. Numbers coming at 5,700 crores. All of this has been led because of a better performance by Jaguar and Land Rover, especially in Q4. But let's pull out 4 key points of what's worked and what's not worked also, which could be some near-term headwinds. They are going to launch 3 new EVs in this year in FY27, starting with the Range Rover electric vehicle. Then will be followed by the Jaguar, as we mentioned. US inventory currently is quite low because of the tariff situation. That inventory build-up could reflect in the wholesale number for this year. And the India PV growth, which is not too big in terms of revenue compared to JLR, but is expecting a 10% growth as well. But important to point out some near-term headwinds as well at this point of time, because there was not much commodity hit, the company said, in Q4. And in Q1, they are seeing that. So in April and half of May has gone by, 5 to 6% of revenue could be hit because of the commodity cost impact, and that all will come in now. They've only taken a 0.5% price increase in April. So they are absorbing a lot of it. That is something to watch. Some supply constraints also continues to be one of the key ones as well. Export shipments are uncertain to other countries. And very interestingly, just a quick point that the management made, that the Chinese OEM competition in Europe was the question, to which the management says that they're definitely coming through in strong numbers. But finally, in terms of brokerages also, I think Macquarie, Citi as well as Jefferies is what we've consistently highlighted. They are maintaining an upbeat performance, but margins is something to watch out for.
Okay, watch out for margins. Avinash, quick take on Tata Motors PV. Are you convinced enough is enough? So beaten down that it deserves to rise like this?
No, I think, Tamanna, the numbers which came from JLR and Land Rover have been much better than the street expected. In fact, as Puneet pointed out, the profitability was much ahead of what the street expected. And that was the reason, the stock is up today. My sense is, typically, if you ask me, the trend in the market is that at least, as of now, higher crude prices may not impact demand immediately. But I think as we go forward, the management has also sounded a little cautious that they may not be able to give a very strong visibility number, at least for the next 12 months. But over the next 1 or 2 quarters, they seem to be quite comfortable. So my sense is, yes, I think if the JLR and the Land Rover volumes continue to pick up, and obviously, if there are no kind of roadblocks in the way, then I think you could possibly expect a further re-rating here. The stock was down ever since the demerger took place. But now with better numbers, I think the street is little confident that this current year should be a lot better. But I think we will have to wait for some more clarity, from the management, considering the fact that geopolitical conditions and the rise in sharp fuel prices would definitely impact them. So I think we'll have to take a wait and watch call. Investors can definitely, buy this share in a staggered manner, because the stock has moved up significantly in a short span of time.
That's true. All right. Speaking of geopolitical tensions and the fact that the West Asia crisis has caused problems for a lot of companies. In fact, it's visible in certain cases in the fourth quarter, like, for example, Chalet Hotels, which has reported a mixed set of numbers with profit rising over 30% and margins improving, but occupancy taking a hit amid that geopolitical tension. Average room rates have remained strong. A softer travel sentiment has weighed, however, on the revenue per available room, that's the RevPAR, and occupancy levels. Let's talk about what took place in the fourth quarter and also the outlook for FY27. We're joined by the management, Shwetank Singh, who's the Managing Director and Chief Executive Officer of Chalet Hotels, joining us right now. Mr. Singh, thanks so much for taking the time and pleasure speaking with you on NDTV Profit. So let's get this out of the way. Let's talk about...
I just want to come in on the rupee. I'm so sorry. We need to address this. The rupee has hit $96. 96 rupees to the dollar for the first time ever. And I'm sure this is something that Mr. Singh will also have to say a lot about, because it's a pain point for everyone. We'll get experts on this as well. But this is just a new level. It is a new level. But having said that, it's at a point when we are seeing maybe the pain increasing. We've been talking about the double whammy from an India perspective. You have higher crude prices, and we should pull up the latest crude. You have crude at 109 and rupee at 96. That's not a great combination, and we'd like to dial in some people who are tracking the rupee very closely and talk about it. Quickly, Shwetank Singh, I want to come to you on your results. I'm sorry, but we have to address breaking news. Just what does rupee at 96 or the kind of forex hit mean for a business like yours?
Not all negative, thankfully. It does make India a more attractive destination for foreign travelers, and they get more bang for their buck when they are traveling. But of course, on the supply, on external and imported supply, there will be a short-term supply pressure from the exchange perspective. We also pay a lot of our fees to operators in dollars, so that can sometimes be a pain when it comes to that. But overall, I think it is what it is, and it is a VUCA world that we live in, and we need to quickly pivot to make sure that we are not losing out because of issues like these.
It's an important point that you make, Mr. Singh, but when it comes to travel, people have not been traveling, unfortunately, amidst this geopolitical crisis, and it must also be stated very clearly. In fact, we should pull up the equity markets while we're at it, because this is going to have a bearing on the equity markets as a whole. Bear in mind that while you've seen this slide in the Indian rupee, you've also seen a significant increase in crude oil prices. Those two elements have been tied. And so therefore, from a travel perspective, you've had a lot of airlines that have gone ahead and cut international routes. So while on the one hand, you can have bigger bang for your buck if you're coming in from overseas and holding dollar, it is to be said that travel into the country is not as frequent as you might have liked. So what are the factors that have contributed to the rupee dropping as much as it has? So first and foremost, of course, you have to establish the fact that it is crude oil that has gone up quite substantially. We should pull up the crude oil prices as we're speaking right now, because Brent has hovered well above that $100 per barrel mark for a while now. It has actually moved up a little bit as there is a lack of clarity on where this Iran crisis is going. There has been a status quo for quite a while now. The conflict is well above 75 days now, and it's not showing any signs of ending. There was an expectation, of course, that the conversation in Beijing, Tamanna, between Donald Trump and Xi Jinping might lead to something. It is yet to come to pass.
Alex, just to put it into perspective, 1st Jan 2026, not that long ago, the rupee was at 90. You're sitting in half of May and you're at 96. This is not the pace of depreciation that you see in regular order. And yes, fair enough that the world has not been regular. Things have not been regular. But the fact that you've had this ferocity of depreciation is painful. And it's not painful just from the obvious point of view that the crude you import becomes even more expensive for you. Plus, you are importing at a higher level because Brent is at 109. I'm just going to get Anindya Banerjee in because this is a big story we're tracking. His SVP Currency and Commodity Research, Kotak Securities, joining in. Anindya, very good afternoon to you. Rupee at 96. People were saying is going to get here, but this fast and this furious.
Thank you for having me. A very good afternoon. Actually, it is all linked to the crude oil prices, with the Brent now approaching 110, and seems like it could again make attempt towards 120 because the market is apprehensive that fresh hostilities may start. in Iran. So if that's the case, then USD-INR could move even higher because it's a kind of a twin shock. One, your higher oil import bill. Second, it leads to more FPI outflows. So it creates a double layer of demand for dollars.
Anindya, I believe I was speaking to you either yesterday or day before yesterday. The days, unfortunately, along with the rupee are blurring. And so therefore, 97.5 is what I think you said you anticipate to see towards the end of the year. Are you bringing forward that estimate at all?
Yes, because the current situation is that everything is getting priced off Hormuz. So if the Hormuz continues to stay shut over this month, I think from June onwards, oil prices can be substantially higher at a level where it starts to destroy demand. So at that stage, we could see even 97.5, 98 happen by end of this month or by mid of next month.
Okay. So what about the commentary, and this is source-based, of course, Anindya, you must have seen the report yesterday. The Bloomberg report that talked about the possibility that the Indian government is contemplating easing tax norms for foreign institutions looking to invest in Indian bonds. Do you think that this is a step in the right direction? Do you think that more needs to be done? For example, something that took place in 2013, you had FCNRB deposits where you had inflows from that perspective. Do you need to now push the pedal to the metal and do something on the regulatory front?
This step, if this actually is implemented, it will be a very positive step. But we have to understand that such steps will start to have a positive impact when things normalize externally. But FCNRB, and then there are other options too, which can immediately improve the dollar flow. But I think government and the RBI is contemplating all the measures because this is a global crisis. A lot of unprecedented steps have to be taken, and I presume the government is contemplating them.
Okay. For the year, you've had a 7% depreciation of the rupee. Now, an average depreciation may be in the range of 2.5 to 3%. 5 would be at the upper end. You've had a 7% depreciation. Anindya, are you expecting any action, or what could be the action from the Reserve Bank to come out and defend the rupee? Do you think it's required at this point, or from an exporter's perspective, this is positive?
It is from the exporter perspective positive because Indian rupee is one of the weakest. It's just not about the USD-INR. It's one of the weakest currencies across the peers in the emerging market basket. So that gives an edge to the exporters. But having said that, the government and the RBI will be looking at steps because if this gets closer to 100, that psychological barrier, I think we could see a very heavy intervention from the RBI, both policy intervention as well as actual intervention.
Is the pathway to 100? Anindya, do you see that happening? Is it a possibility?
That totally depends on the oil prices because oil is capped at 120. As long as it stays capped, it's fine. But if this flares up, then towards 140, 150 like we had seen in 2008, then I think we could see a lot of pressure on the currency. Yeah.
Okay. So, by the way, the equity markets have also seen a sharp drop from the high point of the day. But the rupee, that intraday rupee move is quite significant. Anubhuti Sahai, Head South Asia Economics Research, Standard Chartered Bank, joining us right now. Anubhuti, your initial take on the implications of rupee and 96. Ultimately, this is a double whammy, as has been described. Crude well above $100 to the barrel and the rupee where it is. This is the perfect recipe for inflation spiking sooner rather than later.
Yeah, sure. So I think I would just add one point here that while rupee has reached 96, we need to look at the level where rupee is trading in the broader context. One, there is a dollar strengthening story. Second, oil prices are extremely elevated, and that is having repercussions for rest of the other currencies too. It's not only rupee which is under pressure. But of course, pressure for rupee is much more because FDI flows have weakened. FPI outflows are massive. And of course, with oil prices, the current account deficit is much more wider. It will be inflationary for sure, but all said and done, our sense is that if we look at the rest of the year of financial year 27, inflation is unlikely to breach the upper threshold of the MPC's mandated band of 2 to 6%. Currently, probably the consensus forecast would start inching towards 5 or slightly higher than 5%. But given where, given that the starting point is pretty low, there is enough food stock. Our sense is that the spike is inevitable, but probably it won't be a repeat of what we saw in 2030.
Anindya, I just want to ask you and pull up the intraday chart for the Indian rupee, because just over the last 10 minutes, you see that considerable spike. So I'm just wondering what has occurred. Have you heard of some reason why there is such a sudden spike in the Indian rupee?
Actually, it is the Indian rupee is reacting now, but if you look at the global market, since morning, there is expectation that the oil prices will spike now. It has been consolidating, and with nothing coming out from the Xi and Trump meeting, there is a fear that the next round of hostilities could start. So that's the reason why since morning we are seeing the dollar rising internationally, the bond yields rising, and also the commodity markets, especially the metal markets, coming under pressure. I think the signs were there. Now the rupee market is catching up.
Anubhuti, I just want to come to you on what India now needs to do. We've seen a couple of things happening in the last few days, right? We've seen this appeal from the Prime Minister, then we've seen the curbing of gold imports, etc. We're pairing it off with this ATF VAT reduction in Maharashtra, 3 rupee pump price increase for diesel and petrol. What more do you expect to see? Because now we need to start defending the economy in a serious way, isn't it?
So again, I would reiterate that we shouldn't be just looking at rupee level in isolation. There is a broader global backdrop, and it's not a static number. It will have to take some burden of what's happening globally. So we have to look at 96 in that context. Second, your point is very valid, that given the pace of depreciation, we need some policy intervention. I think some of them have already come in through. And I would also flag that we expect RBI to be far more tolerant of weaker rupee going forward than what we have seen, say, in similar episodes like, say, in 2022, because all central banks are going in a reserve preservation mode. There is fair bit of uncertainty, and the duration of this war is not known.
If you could just explain that, in simpler terms, what do you mean by you expect the Reserve Bank to be more tolerant of the rupee as they have done in the past, because all central banks are going into reserve mode? Do you think, should I understand that as the RBI has little choice at this point but to allow the rupee to depreciate further?
So it is not about a choice. I think when we look at RBI's reaction function to level at which rupee is trading, they always take into consideration where oil prices are. Oil at 120, we import 80 to 90% of our energy requirement, and therefore rupee has to reflect some of that adjustment. There is a fundamental change in one of the metrics in the equation. Second, FDI flow. It has dwindled massively. And if capital outflows, even if we talk about FPIs, is weak, then the overall external flow story looks much more weaker, and therefore the rupee, given that it's a market metric, needs to adjust. The other part is, does RBI have ammunition? Absolutely. They still have 9 months of import cover. As you mentioned, a few measures have been taken by the government as well as the RBI. We do expect more measures to be rolled out. But will the measures, those measures can be a repeat of 2013 style NRI deposit scheme. It can be an incentive structure to get corporates and banks and NBFCs to raise more dollars from outside. Those kind of measures have been used again and again in the episodes of 2013, or say even in case of 2018. It's not a new playbook for us. But Will they really stand in the way of rupee? I don't think so, given if oil prices remain elevated and if capital flow story doesn't turn around.
That is the one
so
fulcrum.
The adjustment has to happen.
Yeah, that is the one fulcrum on which so much is hinging. Abhishek Goenka, founder of India Forex and Asset Management, joining us as well. Abhishek, just a short while back, Anindya was making the point earlier today that or rather he was saying that earlier today there was an expectation that crude oil would spike, and the fact that nothing has emerged from the Xi-Trump meeting that could suggest an end to the conflict in Iran is what is causing the Indian rupee to slide further. Is that something that you would align with, or are there other factors in your opinion that are leading to this sudden slide?
So as we all know that, India is getting hit from all the areas from a flow perspective. Somebody earlier was talking about FDI, FII, capital flows. Services exports are slowing down. So, and there is no avenue by which dollars are coming into the country. And outflows are increasing, and we don't see any respite there, which ultimately moves our current account from 1% to 2% or even more. That's a major concern. And RBI has been using ammunitions all the way in the last 4-5 months, from NDF interventions to now gold imports, to various swap windows, etc., but no respite. So one thing is clear, and what we get from the market also while we talk is, when we talk to the export community, they're enjoying the ride and they don't want to sell dollars at all. So that entire flow is out.
Yeah.
From the import community, simply they don't want to take risk because every time they are holding, they are paying a price which is 1 or 2% higher, even in a week's time. So the trend right now is stay put, don't do any covers for the export community, and for import community is extremely scared. So from the interbank flow, there is no selling in the US dollar. And from the external front also, we are not getting any respite. So as your earlier guest was saying, the only way, and I don't know why and what, and by what duration they're going to take a measure, until and unless we stop our outflows and we have something which brings inflows of the US dollar.
Yeah.
Rupee may not get settled down.
Yeah, it's not looking pretty, because from the perspective of a foreign institutional investor that has stayed invested in the Indian equity markets, it's certainly a double whammy, because the markets have done badly, relatively speaking, and the rupee has also slid quite considerably. It's probably causing them to exit even faster than they otherwise might have. Anindya, the question has to though be asked. If you look at certain other currencies in the way that they have behaved, and the yen is a prime example in this case, the BOJ has gone on record to warn speculators. Is there a case of, to a certain extent, speculation playing a role in the way that rupee has slid as dramatically as it has?
Compared to a yen, no, because recently the RBI has taken a lot of measures which has taken a large part of the speculation out. You cannot have 100% speculation proof, because speculation is also a part of the natural market. As far as the NDF market is concerned, speculation will happen, but RBI has no jurisdiction. It can always intervene there. So I think at this point in time, as Abhishek also said, that we have to basically create policy intervention. Of course, the FX intervention will continue. But until and unless some policy intervention comes, we may not see a large dip in the USD/INR price, and then we are completely dependent on what happens in the Hormuz, because that is the critical factor in this.
Anubhuti Sahai, just to the point Abhishek Goenka was making earlier, that this is going to continue till we curb our imports or our spends and find a way to attract dollar inflows into the country. How do we do the latter? What is there in the playbook now available to help this situation quickly? Because clearly we are in a situation where, or we are in the stage where we need to help the situation quickly. Could we perhaps see some tax cuts which could attract inflows? Is that one part of the playbook that could be used? What else is there in that playbook?
A tax cut is one of the considerations. Having said that, given that the investors' sentiment towards emerging market debt or equity markets where AI is not the big theme, I think tax cuts won't bring in the kind of inflow which is required in the current scenario. It helps to stabilize sentiments, but probably it won't move the needle. The other options are reducing withholding tax on commercial borrowing, along with giving concessions on swap rates to make it lucrative enough to borrow from outside. I think some tightening of rates within the country might be also desirable to make raising dollars more attractive. The third and one of the most almost like a silver bullet, which was used in 2013, was this whole NRI deposit scheme. At that point in time, RBI was able to raise almost 10% of its FX reserve via this particular scheme. There was again a concession on swap rate, or there was a cost-sharing model between RBI and the banks to incentivize NRIs to put in money. And I think that particular tool can be again deployed. But, we have to be sure that it raises dollar in the required, in large scale, because the need of dollars today is much more larger than what we saw back in 2013. So as I mentioned, there are plenty of tools which can be rolled out. The whole thing goes back again to the problem of FDI flows dwindling away, FPI staying away, and oil prices. So that's the most, those are the three fundamental things which we need to watch out when we are looking at the pace of rupee depreciation.
Got it. All right. Anubhuti, Abhishek, Anindya, thanks so much for taking the time and for speaking to us. This is, of course, a momentous but not the best thing to, of course, talk about the rupee sliding to 96 rupees, and that weakness continues. As we've seen the slide in the rupee, you've also seen a slide in the equity markets, and we're at the low point of the day for the benchmark Nifty 50. It is trading, actually it's bounced back. Okay, that's good news. It's just about 0.1%, but significantly off the high point of the day. The broader market's also losing a little bit of ground. We'll talk about individual counters on the other side of this very short break. Stay with us. This is where all of the action is taking place, so stay tuned.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the Jury, Founder and Chairman Bharti Enterprises. Noel Naval Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What Okay, it's turning out to be a very, very eventful day and a very eventful close. To pull up the intraday of the Nifty, and that dive you see, and after that a slight recovery, is corresponding to what's happening in the rupee. The rupee sliding to 96, also possibly seeing a small recovery, very small recovery, at 96.08 now. But still at those key 96 levels. Now, to compound all of that misery, Brent at 109. So you will see some spots of green, but there will be few and far between when it comes to the markets today. We're going to get into specific stocks and how you should set up as you close off this week, but we can't miss Sumit Sarkar joining in with all the chatter from the dealing room. Sumit, what's on your plate this afternoon? It's looking quite empty as we end this week.
Right, even traders are not taking too much positions over the weekend, given the fact that even in past we have seen multiple times that there are multiple geopolitical outcomes that come in and post that markets move sideways, and hence traders are also not taking too much, or they are going light in over the weekend. But few stocks that dealers have highlighted. Firstly, it's Acme Solar. Now dealers are expecting an announcement regarding a fundraise or an OFS to come in very soon in this counter, and hence some sell flows coming in here. Then there is Shilpa Medicare. That stock is up nearly, at one point of time at least, it was up nearly 9% in trade. There are buy flows on the large HNI desk. There's a buzz of some drug approval that is expected to come in very soon for Shilpa Medicare, which could be quite positive. For NRB bearings, a prominent large HNI has been accumulating this counter in trade today is what dealers have highlighted, and they're also expecting some positive corporate development to be announced very soon when it comes to NRB bearings. And lastly, Samvardhana Motherson, keep an eye out for that counter. There are buy flows on institutional desk is what dealers have highlighted. Delivery volumes are expected to be on the higher side, and what dealers are indicating here is that the fourth quarter numbers are expected to be much better compared to what the street has been anticipating for Samvardhana Motherson. And lastly, Skipper was something that we did indicate yesterday, where we did mention that there are buy flows on the PMS desk and dealers are expecting a large order win announcement, and today the company has announced an order win of around 1200 to 1300 odd crore rupees.
Okay, Sumit, while you're with us, let's talk about this 3 rupee increase in fuel prices. This is a small move towards reducing the kind of losses that OMCs have had, right? Can you put that into perspective for us? Because there are various calculations out there on what the required hike would be to bring things to par.
Well, Alex, to be very frank, it's very difficult for any analyst to put out what is the required price hike, because at what price oil marketing companies are buying crude, this information is only privy to them and not to anyone else. I don't believe even the oil ministry would have the exact data at what price they are buying the crude at this moment. But if we just go by what the oil minister had said earlier, they clearly mentioned that oil marketing companies are staring at a loss of around 1 to 1.2 lakh crore for the first quarter of FY27. This means that on a daily basis, they're incurring a loss of anywhere between 1100 to 1300 odd crore rupees. Now, what I've done is here is a back calculation. If you see the per day diesel and petrol consumption that happens in country, it stands at around 463 million liters on a daily basis, of which the major portion is diesel, which is around 308 million, while petrol comes at around 155 million. So if we just multiply this with the 3 rupees increase that we are seeing, and assuming that oil marketing companies have a 90% market share in this consumption pattern, then this translates into a revenue of around 120, incremental revenue of close to 125 crore rupees per day, which is just 9.5 to 11.4% of the actual loss that the oil marketing companies are incurring at this moment. So around 10 odd percent is what they are covering with this 3 rupees per litre hike on petrol and diesel, and they are still a long way from covering the entire losses that they are seeing on a daily basis.
That's really the kick, right? And the trigger. Are we going to see a further increase in pump prices? Is that going to help with anything? Maybe not. Maybe if we honestly all start listening to that appeal from the Prime Minister, austerity measures, etc., we might need to import less crude. But really, I don't know to what extent it's going to help unless we have a real solution in the Strait of Hormuz very, very quickly. Vinay Rajani, CMT, Senior Technical and Derivative Analyst at HDFC Securities, is on the show now. Neeraj Diwan, Independent Market Expert, joining as well. Very good afternoon to both of you. Vinay, I know you look at charts. I'm going to start with the Nifty and also hazard a question on whether there's a technical analysis of the sharp fall of the rupee that you have.
Yeah, good afternoon. So yes, Nifty is not able to cross the 23,800, which happens to be the swing low resistance. Today it went up and crossed that level in the intraday, but did not sustain it higher level. And again, we can see it is facing a selling pressure. So overall, momentum wise, it is trading below 20, 50, 100 and 200 days moving average. So that way it is clearly into a downtrend because of the result season and because of some global cues like crude and rupee. This consolidation is going on in some sectors which are benefiting are performing well, and some sectors which are actually having negative effect are not performing. So pure consolidation is going on. Typical result season choppiness can be seen in many of these stocks, many stocks. So difficult to get the momentum and directional trend right now, and for trader it becomes a very tough market to trade. And on the lower side, 23,262, which happens to be the recent swing low, will act as a support. So there is no clear-cut momentum side sign in the market right now. But yes, the primary trend has been on the weak side. So there's a good probability that ultimately we will get cues from the rupees, the negative cues from the rupees. And rupee has been giving a leading indication of the market trend nowadays. So we have to track it closely. So as of now, things are not going well. We have to just keep a tight stop loss of 223, 262 in the Nifty. If that breaks, then we can expect 300, 400 more downside. As far as rupee is concerned, it is at all-time low. So definitely there is no change in trend. It is clearly into a downtrend against the dollar. And unless we see any meaningful consolidation or reversal, we should not go against the trend. So right now, the rupee is in a clear-cut downtrend, and we should not anticipate, try to anticipate any bottom there. So better to wait for some clarity or consolidation there also.
Neeraj Dewan, the point has been made that foreign institutions have continued to sell. Of course, we've been witnessing that on an ongoing basis in the equity markets. But for somebody that is not familiar with the quantum of equity that is still held by foreign institutions, they'd be forgiven for thinking that there isn't much. But the fact is that there is a very considerable amount. So given that we have seen this massive slide in the Indian rupee, is there a fear that selling in the equity markets by foreign institutions will only accelerate at this stage?
Yeah, good afternoon. I think there is a possibility that it can accelerate. So they can be, we have to see various circumstances which, will be our way going ahead. If crude continues to behave the way it is behaving right now, and there is no resolution in the Strait of Hormuz, and the stalemate continues, so then if you have crude above 100, 105 for a longish period, that's going to have a serious impact on our economy. That we're already seeing, and that will continue. So that, plus if there are no measures taken by the government to attract foreign exchange. Now they're only talking about saving foreign exchange, not spending foreign exchange. But they're not really talking too much or not taking any measures, concrete measures, to get foreign exchange into India. If these things don't happen going ahead, then the selling may continue going ahead also.
I just want to understand from Vinay. And Vinay, you spoke about the technical levels of the Nifty and the rupee trend very clearly. You talked about things are not looking good right now. Would you hazard any calls right now? If not a long position, a short position?
Yeah, as I said, some sectors are really outperforming and we can choose long trades from there also. So on the short side also, I'm not able to find the short trades because of the lack of momentum on the both sides. But depreciating rupee can be beneficial for the pharma sector and IT sector, but IT is having their own problems. But yes, some selected stocks are there which are looking good to us. Like Sun Pharma is looking really good on the charts and can benefit from the depreciating rupee and is not, at least not having any negative impact. So technicals are suggesting that this stock should continue to do well. So around 1875, one can trade long. One can keep a trading stop loss at 1840. On the upside, we can expect a target of 1910 in the short term. The second stock, I am taking it from the IT space. It is not typical IT, Indian IT stocks, but it is the MNC stocks, which is Oracle Finance, OFSS. That has shown some correction and now again resuming the uptrend. Yesterday, there was some reversal sign and today follow buying can be seen. So 9040 should be the trading entry level. 8850 should be the trading stop loss. On the upside, we can expect a short-term target at 9400.
Okay, let's talk about some of the winners of the morning and see if they're still winners, frankly. Tata Motors PV, has it held out? I really don't know if the markets have spared anyone or anything right now, but Tata Motors PV seems to have held out. And Neeraj, I want to come to you on this. Tata Motors PV on one end, Mahindra & Mahindra on the other end has been one of the top losers on the Nifty. Is there an OEM play over here or Tata Motors PV is a story on its own?
I think commercial vehicle, that's a space I think is interesting. But I feel that there can be some short-term problem which may rise because of high crude prices, interest rates going up. But for a medium to long term, I think that commercial vehicle space is positioned very well. Post the crisis getting over, I think there is a lot that may happen as far as infrastructure movement, cement, all these sectors should contribute a lot going ahead. So I think I would go with commercial vehicle space. I think that there's a better chance of that recovering faster than the passenger vehicle space.
But individual counters that you like, Neeraj?
See, in individual counters, commercial vehicle space, Ashok Leland, last few quarters have been doing quite well. So that would be my pick there. And Mahindra definitely has a mix of commercial vehicles, farm equipment as well as passenger vehicles. So there I would still be little cautious right now and let more clarity come. But pure commercial vehicles, Ashok Leland would be my pick.
Here's my question though, since we're talking about original equipment manufacturers and all of these automotive companies, right? You've already seen flat rolled steel prices go up. You've seen chip prices go up, and we all know that all modern cars are using a considerable amount of chips. You've seen, so therefore it's across the board input price increases, and you're not certain whether that's going to be able to get passed on. So while you're saying you'll wait for a bit to deploy further into OEMs, that's well and good. But what if you hold OEMs in your portfolio? Would you lighten your positions right now or lighten your holdings of OEMs because they're getting into bumpy roads?
There is, I feel that if you're percentage-wise, your portfolio, because last 2-3 quarters, passenger vehicles have done very well. If you're holding as a proportion, the proportion is higher than what you're comfortable holding right now, I think it'll be still wise to prune some of your positions in passenger vehicle space. The stocks like Mahindra, TVS, they've done very well over the last few quarters. So evaluation-wise, they may not be that expensive, but there can be a problem going ahead. So to prune a bit from these levels, your allocation has been higher, it still makes sense.
That you would add at this stage, Neeraj, in that you're looking at a scenario where across the board there could be pressure, even in the financial space. There is a question mark about asset quality worsening in certain pockets, which hasn't happened yet, to be fair. Is there anything that you would add right now?
So what I've been adding or advising also recently has been energy stocks. Energy has been one segment where I think the demand for good stocks will go up only after this crisis. So any company which is into renewable energy, whether they are going through a capex, energy storage, that is another field where a lot of capex is happening. So energy would be one, and second, even FMCG. I've seen that some companies came out with very good numbers, and if inflation goes up, it gives them a reason to increase prices, and most of these companies are able to pass them on also. And FMCG would be the second lot I'll be looking at. And besides this, I think it's again going to be mid cap, small cap. It's going to be stock specific.
Okay, stay on with us, Neeraj. Just want to talk about a very interesting story. India's real estate sector is feeling the heat from the ongoing West Asia conflict, with developers flagging rising costs, supply disruptions and labor shortages. Ridhima is joining us for more on this development. Ridhima, there is now an official petition from the body of real estate developers, isn't it?
If you're looking to take possession of your house, you might have to wait a bit longer, as the Real Estate Association has written to the Ministry of Housing and Urban Affairs over the disruptions they face due to the Middle East crisis. The association has sought a force majeure over real estate projects due to supply chain disruptions and labor shortage. The builders have also sought an extension of 3 to 6 months from RERA authorities over real estate projects. The main reason behind this, they say, is the rise of input costs, logistic costs and shortage of labor. If you were to understand the main reasons why there is pressure in the real estate sector, the main reason is the LPG crisis, which led to the reverse migration among the laborers from the urban cities. Secondly, the input costs which have risen for cement, steel and aluminium. Cement costs are up by 30%, steel costs are up by 5 to 10% and aluminium costs have risen by 8 to 12%. leading to construction costs up by 6 to 10%. Not just this, the logistic costs have also risen due to the crude oil prices rising by 46 to 60% since the war began. Now we have to keep a close eye on the commentary of the Ministry of Housing and Urban Affairs on what impact does exactly come on the real estate sector.
Thank you for that, Ridhima. I just want to come to Neeraj Diwan on realty stocks. Again, the index feeling a bit of pressure today. Is this going to be the obvious pain that we will see going forward in the real estate sector?
The thing with real estate sector is that last 1.5 years, the sector has been under pressure. So it is not that they recently come under pressure. Post 31st March, when we saw that kind of a correction in the market, we saw some value buying happening in selective stocks in real estate. And post that, again, some selling pressures come in after you saw some bad results from some of these real estate companies. I think that that if the stocks correct from these levels, again, some value buying may emerge, because, real estate sector is one sector where valuation-wise, after the correction, some stocks have become attractive. Though immediately there are still concerns. There's high interest rates, sales not picking up, new projects are not getting launched that easily right now. So those concerns are there for the shorter term. Over the medium to long term, if you're getting some meaningful corrections, if you get some value buys, I think they would again return. The value buying will again return.
Okay, another sector that I want to talk about is, I think the outlier today is the IT space. And pull up the Nifty IT. All of the IT pack is up. Variety of reasons, of course. One of a lower rupees is clear gains for IT companies. So even the Nifty IT is off its highs. Any of the IT names that you'd look at, Vinay?
Yeah, so as I already suggested, OFSS is looking good, and most of the other large cap IT stocks are trading near their 52-week low. But one important observation I can see in the Nifty IT index, from the all-time high of 46,000, Nifty IT index has fallen to 27,700 odd level. Now, if I were to go by the history in 2022 and 2023, there were multiple bottoms around 26,300, 26,500. So this long-term support is very near to the current level. It might happen that it may touch or it may not touch. It may reverse from before also. So now after falling this much, I see some strong support coming in IT index. So at least if I have a trader, I would at least ignore shorting here, because there are some semblance of support looking at the chart. So better not to go short also at this particular level, because they are oversold and now have reached to the long-term support levels. So I would not take a bearish bet right now in the IT space. I am waiting for the bounce back or pullback in the index from current levels.
Okay. All right, let's talk about a few more buzzing stocks, and we've got Jasmeet joining in to tell us about the list. Jasmeet, what's on your list today?
Well, thank you for that. Starting off with the first one, I have overall Sheela Foam. So this stock has been elevated since morning. Now, if you look at what worked for this particular counter is the overall volume growth. We do see that the company has seen broad-based volume growth in terms of the overall mattress and foam segment. And the key drivers of the growth has been by the e-commerce and quick commerce business, leading to the overall top line and EBITDA growth. In terms of the expansion, the management has roughly established 600 plus new showrooms in FY26 alone, and management is betting big on the market going ahead. If you look at the key numbers, the revenues of 23%, while the net profit sees a jump from 13 crore to 91 odd crore. While the next one is Muthoot Finance. Well, this stock has been tanking since the start of the trade, and the key reasons why the stock is down is firstly the active customers, which are down about 2% on QOQ basis. Further, we also see that the overall OPEX to average loan asset has been weak, has been remained elevated for the company. That's the second reason. While the third one is the overall guidance on AUM remains weak by the management, and the lastly, the cost of borrowing to increase further going ahead, what the management is saying. So the last one is Hoodco, which is again buzzing into it on the back of that positive outflow news.
On Muthoot Finance, since we're on the subject, and it was one of the buzzing stocks, Neeraj, what did you think about this? Because the stock is down about 6.4%. I think it's on account of the churn that they've seen in their customer base. It's dropped about 2% QOQ. The management says that it's on account of smaller customers moving elsewhere.
Yeah, actually, there is a lot of competition which has come on for these gold finance companies. Most of these PSUs have this product. They're also lending. They're giving you a good rate. And some people even feel comfortable dealing with the PSU bank. So I think it is more to do with competition. But, again, It will be how well the company is managed. So Muthoot Finance has been managed very well. We've seen they've been very disciplined over the past so many years, so many quarters. So I think after a particular correction, again, I will be looking at Muthoot Finance. But right now, I think it's happening more because of the management statement, which is giving an indication that a lot of competition is definitely coming their way.
Okay, thank you so much, Neeraj and Vinay, for joining us today on the show as we're wrapping up. What is it? Admittedly, a little bit of a disappointing end to the week. I mean, the whole week has been tough, and we'll pull up that weekly chart as soon as markets close. But suffice to say, you would be ending in the negative. 23,645, not even 23,700 defended. Declines in advances have gotten clearly negative. Rupee at 96, Brent at 109. All of this has happened in the last 1 hour. Let's pull up the intraday, please, of the Nifty and then go to the heat map. There you have it, slight recovery. I mean, this is the deadest cat bounce ever, which has come in 45 points down. The heat map really showing you the same ones which are hurting. Eternal has joined the top losers list. Can we see the intraday of the Eternal stock and DRL? That's also another new one. So Eternal has taken a bit of a dive over here. Could also be high crude prices, high pump prices doing that. Dr. Reddy's has spiked right at the end, so we have to watch out what's happening there. Interesting moves in Dr. Reddy's.
It might just be an element of foreign revenues coming through and certain tailwinds coming through.
Could be. Export-oriented companies is what you should look at, because if Rupee is going to go through this trajectory, that's what we will see. The Nifty IT is testament to that story, isn't it? I think a feeling that consumption will get hit, because look at a Nestle and an Eternal in that list. Let's just pull up the Nifty IT intraday, if possible, before Alex talks about the broader markets and what's happening there. Cooled off, but this is the only one which managed to survive the deluge of red today.
Absolutely. Let's in fact talk about the broader markets, because you saw in the breadth that there might be a little bit of a downtick, and it is in fact evident. 0.5% cut for the mid-cap index. Small-cap index is more or less keeping pace with that 0.4% or so. Remember, in the recent past, barring a day or two, there has been more resilience for the broader markets than has been for the benchmark Nifty 50. Now, I think we're very close to the close of trade, so you will get a sense. But pull up the advance decline ratio for today, and you will see that it's actually gone through quite a few changes. Advances actually at one point of time in the lead, and quite considerably so, but that wide opening of the gap towards the end of trade, I think does not bode well necessarily for Monday. The end of the week or Monday, in fact, because things, as you pointed out, are getting worse on multiple fronts.
You know what the fear is? That because we've come out with uncertainty out of the Xi and Trump meet, it can go very well or it can go very badly. You could go back and see kinetic war starting again in the Strait of Hormuz, or you could see suddenly some peace deal being announced. Here is what the market is betting on clearly. Let's just, as we wrap up, we'll see the sectoral indices, and we will see the top gainers and losers before we get into a very interesting session of the editor's cut today. Nifty Realty is the biggest loser. We just showed you a story before we closed off the show about how possessions may be delayed. First of all, labor shortages, material price hikes is going to be a pain for realty companies. So that's really a pain point there. Nifty Metal, okay, you can put it down to some profit booking. PSU banks, maybe with the kind of exposure they have, about 2% down.
Even the IT index, though, coming off the high point of the day and ending with gains of just about a 1.2% or thereabouts. If we can, just to close out, pull up the weekly chart for the Nifty 50 and the broader markets, because that will give you a sense of how the recent past has moved. We have lost a considerable amount of ground at the benchmark level, even though we've recouped a little bit. Of course, it was 4 days in a row of cuts from last week, 2.3% for the benchmark Nifty 50. Pull up the mid-cap index and the small-cap index as well. More or less the same for the mid-cap index. The small-cap index, finally, just to close things out, 4%. So this is where the biggest cuts have been. Remember, there has been an outperformance leading into this week.
That's a good point. Small caps were, I would say, ripe for the reckoning in that sense, when there was a choice or when there was an opportunity coming up. We'll take a very short break, but the analysis doesn't end here. Editor's cut on the other side, and our guest editor this week is Manish Dangi. You don't want to miss this one. He's going to be walking in just a few minutes. We'll take a very short break. We'll be back on the other side.
केसरिया से मन जोगी हुआ रे दिल झूमे देखो मतवारा हुआ रे केसरिया से मन जोगी हुआ
हर पल मनाओ केसरी त्योहार विमल बोलो जुबान केसरी
Excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman Bharti Enterprises. Noel Nabal Tata, Chairman Tata Trusts. UK Sinha, former Chairman SEBI. Kiran Mazumdar Shaw, Chairperson Biocon Group. C.S. Sethi, Chairperson SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah. Watch me on NDTV Profit for the most incisive market intelligence and meaningful corporate conversations.
And I'm Alex Matthew. Markets, mutual funds, insurance, personal finance. I help you cut through the noise and make smarter financial choices. And here's where you can watch us.
When the headlines move fast, perspective matters. On Editor's Cut, our editors come together with experts to distill the week's information plates into clear perspective. Down the stories shaping the world, from markets and the economy to global conflicts and what lies ahead. This is where experience meets insight. No noise, no hype, just sharp takes on what to watch next. Editor's Cut, every Friday, 3:30 p.m. only on NDTV Profit.
Economy, business, world, technology. Noise filtered, numbers decoded. Insights that rewire your worldview. From governance to growth, we connect the dots. Your daily edge, your global advantage. India Business Report with me, Gauri Dwivedi, weeknights on NDTV Profit.
He has been tracking markets for over a decade, spots the trends before they hit the screen. And he is now bringing his analysis to the show that the market
Welcome. You're watching the Editor's Cut. I mean, there is so much to unpack this week. It started off with Prime Minister Modi's appeal.
Yeah.
People wondering how much they should panic, what is happening. And you've ended with the rupee at 96. So there is a gamut of things in the middle. And I would say fewer lights at the end of the tunnel than one would have hoped for.
I think he's making sure that no one really travels outside, because with a 96, forget, the appeal. anyone in sane minds would say, let me just stay put.
And travel within India as well.
Yeah.
And there are so many places that you can go to be fair. But having said that, it is the worst possible climax to the trading week with the 96 that we saw. In fact, towards the end of trade itself, right? 1 hour to go for the end of trade or less than that. And you saw the 96 on the charts. And there was a pretty big spike. So there's concern that, and we were speaking to currency traders and they were saying that from the global perspective, the dollar was showing signs of strength in a situation where the Xi-Trump meet did not yield anything in the form of a move that could end perhaps the conflict in Iran.
So I actually want to start with that, and my take and wrap up for this week starts with the Xi-Trump meet, and I've called it Jab Trump Met Xi. In typical, because we Indians love to see everything in a Bollywood style, but everyone who reads body language for a living would have been very excited by this, because did you guys notice Trump's tone in Beijing on day one, and isn't it much softer than it is in Washington? An observation there, is it telling you something about what that equation was in that meeting? Now here's the problem, and here is why after Trump has departed Beijing, you've seen everything go awry. The aftermath of that meeting can go very right or very wrong. This is what I mean. The fact that there's been an agreement between the United States and China that there should be the opening of the Strait of Hormuz is a silver lining, but will it happen or not, we don't know. Plus, China's tough talk on Taiwan may not go down very well once Trump is back on Air Force One and back in Washington. So one of two things can happen. You can either have an announcement over the weekend saying everything is sorted, Strait of Hormuz will now open, ceasefire will extend, or it can go into kinetic warfare once again. Plus, will there be any repartee on Taiwan once Trump is back? The other big thing, as far as I'm concerned, is definitely that 3 rupee hike in petrol diesel. It's a drop in the ocean. I know politically there's already a hue and cry about it, but it's a band-aid for a gaping wound in terms of the under-recoveries that oil marketing companies are seeing. And 90% of crude costs are still under-recovered after this hike. The fact that the government is shielding the common man from steep hikes is an important political and economic move. But that 3 rupee hike is more of a trial balloon, or is more coming? And then the other one, of course, folks, is the carrot following the stick. If the 3 rupee hike is the stick, the gold import tightening is the stick, then is there a carrot where there could be some kind of tax easing? You want to incentivize people to put money in the markets. You want to incentivize foreign investors to come in. Maybe some kind of loosening of taxation on bond issuances or even on equity.
Yeah, I mean, can't agree less, with this, because overall, Tamanna, from what you're saying as well, what's happening is, are we supposed to really...
Yeah, I was just wondering, are you agreeing less? Agreeing less.
I'll tell you why.
Agree less.
Can't agree less.
I'll tell you
why. So
why.
you don't agree at all?
No. So here, just compare it to what happened in COVID. Initially, everything seemed kind of all right. And then there was that spurt which came in from Prime Minister Narendra Modi saying that, you know what, things are not looking good. Currently as well, you're in a similar situation where initial conversations were that things are seeming all right. We're not in that bad a shape.
Everyday life is not bothered.
Exactly. And now suddenly that's come in where, guys, you have to change your routines. That's what you're talking about right now, right? Probably a work from home that could come in, which is changing your routine. No travel, probably that's changing it. So from all of this, I think from everything that Tamanna said as well, yes, in terms of geopolitics, there is a concern coming in there. You're talking about the West Asia conflict, you're talking about the maritime crisis. You have US-China relations, as you mentioned as well, and the Taiwan Strait, wherein you had the Beijing summit, you had the Taiwan militarization that did come in. And from a global economic perspective, there is a fallout on the commodity surge, the rupee depreciation, and a lot of corporates have been freezing hiring right now. So maybe there is no stoppage in terms of where anything else goes, but there is a concern and panic over there. Now, what is this actually meaning for the markets? One, they're partially probably pricing in a post-war normalcy is what I'm seeing. And probably they're facing near-term consequences of the high crude prices. Now, the next question is what happens to rate hikes? Now, rate hikes, probably it is inevitable in the absence of any oil price relief that it will be there. the RBI will have to look at it, maybe if not in the next meeting, in the midterms. And the markets are not pricing in the growth inhibitors as well. So anything that comes in as a negative surprise is something which the markets are not pricing in. So if you talk about the equity outflows, that is something which is overwhelming the debt inflows, and I'm sure Alex will be able to add perspective to that front as well. And that's where the markets are sensing panic. And if you have to talk about earnings, I mean, you can't say the last quarter was bad. Your first half of FY27 probably is going to be in focus because margins will be under pressure in spite of the price hikes that do come in. So the question now here is, where should an investor go? Because valuations are not seeming that expensive, but you don't have visibility on what's happening next.
Yeah, they're not cheap either. And in fact, that's part of what I want to bring to the table, right? So I think I was asking the team to pull together some data on dollar returns from the global standpoint. And to say that they look bleak at this stage, if you look at the one-year performance of the Indian equity markets compared with practically all of the major markets, that would be a significant understatement. Because you look at this juncture, with Rupee having depreciated as much as it has, it's down 16%, the Nifty 50 in dollar terms, whereas the Dow has gained 18%, the S&P 500 is up 27%. But I do want to point out something else, which is that equity investors in India have continued to pour money in, and retail investors in particular through the mutual fund route. So it is at the end of the week that you saw AMFI data come through, and they remain robust, the equity inflows. In fact, those equity inflows coming through to the extent of 38,410 crore rupees, and that is X of NFOs. The flexi cap funds, which is the diversified funds, have seen inflows of 10,150 crore rupees. Small and mid cap funds inflows of over 6,500 crore rupees, and a further 15,000 crore rupees has come through in the way of index funds and ETFs. Now, and finally, SIPs coming through at 31,115 crore rupees. So here's the thing though. You've had a situation where March and April have seen sizable inflows by mutual fund investors. They've bought into the idea of buying the dip. But the problem is that you could see a protracted period of underperformance, and I'm worried that you could have a situation where there could be more cancellation of SIPs. So because if you look under the hood, even in the month of April,
that's the last straw on the camel's
exactly.
back.
So if you look under the hood and you look at the SIP numbers, the folio numbers, there was cancellation of over 51 lakh, and to a lesser extent, so new folios of about 50 lakhs. So new folios less than folios cancelled.
There it is. I did not know that, and it did not strike me that two funds actually had to stop inflows into their overseas funds.
They have. That's exactly the point that I was also making. So Axis as well as Invesco.
Okay, there's our guest editor coming in, Manish Dangi. Waiting for him to get into our studios. You'll see it on that shot. And, I'm waiting to hear from him how he looks at it. And Manish, of course, very astute market voice, but also someone who understands the economy so very well. There we have it. Manish, we're waiting for you on the set. Come on over as we have you live on Editor's Cut and what we've been talking about. And what I'm keen to understand from Manish, among other things, is that this sort of bear grip that we're under. Welcome, Manish. Great to have your entry on air like that. Welcome to the Editor's Cut. So we were talking about this bear grip that we are under right now. 109 crude, 96 rupee, and appeals on one end. How is this all going to add up? Welcome.
What a welcome.
NDTV Profit style.
Where is the profit?
That you're going to tell us that.
That is the question today.
It's in some days in life, not losing is the profit.
That's true.
Yeah.
Today was not one of those days for a lot of people.
Or maybe a year or two has not been the year where people make money.
Yeah.
That's true.
What are you making of what's happening right now, Manish?
No, we are in a difficult place. It's been building out over last few months, quarters, maybe 2 years. Basically, the reality is that the chat GPT moment for the world was a bad moment for us. So this is where it all began. In some sense, the profit recovery or the good earning cycle not being in place, the reason is chat GPT. But on top of it, now you're having to deal with these geopolitical stress, which is, one would argue was totally unknown. On your show, many times we've argued that we are living in a world with 100 wars all over the world, and it will continue because the hegemon, which is US, is no more there, and now every country is fighting for some territory or product. So in some sense, we are in a little messy world. But things will pass.
Things will pass. The question is, when will they, right, Manish? The question is that maybe 30 days back, a lot of people were thinking, this is transitory.
Yeah.
Look, this conflict is not going to go beyond the month of May. At this point, we're well over 75 days into the conflict. And the worry is that with the Prime Minister making the call to tighten the belt and say, look, be careful on what you're consuming, everyone's saying now, look, you got to be careful. This conflict is going to go on for a while.
Yeah. First of all, you look little than what you really is.
Really? Usually said that television 5 kilos more on you.
So the audience must take note of the fact. Must take note of this.
We should thank the directors like Alex, right?
I look thinner or fatter?
You say you look...
You are actually fatter than what you look on
TV. That is the magic of the screen, ladies and gentlemen.
That's what I said, you should actually thank the directors.
You have effectively ruined Alex's weekend.
I must...
But you look as beautiful as you do.
There you go. See, he knows who to say the right things to.
Who is the chief editor? Okay, that brings me to the point that if the Prime Minister is telling you in such soft voice, the real pain is much higher, right?
That is the fear.
His hint is an alarm.
Do you think, Manish, it's more like a 2022 situation where we faced, and that's what we started off with as well, that the pain was similar, where then the next 2 years were beautiful.
Yeah.
If you have to look, even for the markets, right?
Yes.
Do you think we are in that kind of a phase where probably 26 will be painful?
Maybe.
If you have to compare that, 27, 28 will be something where, investors who probably start building something from now will be in for money.
No, surely it's possible. First of all, just for the context, it is much worse than 2022 because the war is next door. The supply is an issue. It was a little bit of a issue of Europe then could perhaps translate into oil shock, but very quickly it subsided.
No, 2022. She's comparing to COVID. Are you comparing to Ukraine?
No. She's comparing Ukraine. COVID is 2020.
Okay, compared to 2022, this is definitely worse.
Yeah, much worse. Of course, compared to COVID, it is not as bad, of course. But it has some signs of 2013. Okay. So a sustained high crude, a sustained higher current account deficit, and then that led to currency blowing up. If you may have forgotten, but 44, 45 rupee to a dollar suddenly was 65, 68.
I remember the FCNRB.
And then a 3% rate hike.
Yeah.
Yeah. We cannot forget the losses that we had to bear that day.
Is that the next logical step? We were talking today, and this $96 hit just as the markets were closing. What happens now? The RBI needs to come in to defend. The government needs to come in to defend. Can they defend? What happens next? Something needs to be done.
You have to figure dollars in the world right now. See, the easiest dollar for us is the foreigners investing in equity. That's not coming. The other easy dollar is that if we ourselves don't need much dollar because the crude is low, but that's not a situation. Yeah. So then we are a little bit of in a fix. So now we need expensive dollar, and that expensive dollar is a bond dollar or FCNRB, a scheme-related dollar. That if RBI were to come and tell that, look, guys, bring in dollar, and I'll take care of the currency movement. In 3 years' time, you will be able to. Whatever you earn in INR is what you will earn, let's say, in dollar. So that actually will attract a lot of money. So basically, historically, just a second. Historically, every time we have had BOP crisis, and last we had was 2013. We had to come out with something very attractive for these
What is
foreigners.
the low-hanging fruit? I'm just going to say what everyone's thinking. Long-term capital gains tax.
No, it won't make a difference. No. Capital gain tax matter if there is a little bit of capital gain possible. Right now we are a little bit of a fix. We are losing $3-4 billion every week. This is a very large number. We hope that, what Modi ji hushed in our ear that no, things will be fine, but you should do these 7 things. But this is a moral suasion right now. But within a day, gold import duty was increased. In 2 days' time, public servants are being told that 2 days you work from home. In just about a week, you are going to be told that now work on Zoom.
You really think so?
No. Because every corporate has to be. We all are citizens, right? If the Prime Minister is actually asking all of us to do something, we must demonstrate, right? So his call for your duty is this only, that work from home right now.
By the way, media comes under essential services, so we'll still have to come. But yes, I get the broader message as far as corporate.
But you will not call me here in
No, unfortunately, you won't have the privilege.
The metro is right outside, Manish. You must come.
It's not a COVID-like situation.
No, it won't be. It won't be.
No,
all
no,
I'm saying, we all need to play ball.
Yeah.
We all need to play ball. Okay, we are not sensationalizing. The point that Mr. Modi has told all of us that be a little austere about it.
Yeah.
Why can't we all do it? It's a time to save a little bit of fuel, save a little bit of a gas.
My very sincere question. Suppose everyone is austere and does all of the things the Prime Minister has asked. Will it really make a dent in the extent of problem we have? Because 109 crude and $63 not changing, no? Is $96 not changing?
So 96 doesn't matter. 96 is just a way we are expressing a level of stress. So 96 is one way to make things expensive. So WPI was 8% yesterday. The wholesale inflation is 8%.
Yeah.
You and I are experiencing consumer inflation, which is 4%. So there is a division between what manufacturer is experiencing. A factory gate, 8%. But a consumer gate or the shop gate, 4%. So someone is bearing this right now. Right? So basically, 96 is a way to translate the global stress into Indian inflation. If it is 100, there is more inflation. That is one way. So who is going to bear this stress of $100, $110? You could have household bear it by way of inflation. You could have corporate bear it by way of margin. You could have government bear it by way of higher fiscal deficit. OMC's margins compress. They have actually reduced the excise duty on the oil. Yeah. So one of the actors has to bear.
Likely to be a mix of all?
Likely to be a mix of all. Why did you call me? You have the answer.
To hear you praise us, Manish obviously should know that.
But, okay, so just as we're facing problems, other countries
everyone
also
is facing.
Yeah. So, you mentioned the wholesale price index, but in the US...
US is not facing problem.
No, but they have the PPI that has gone up to 6%.
That doesn't matter. See, the country problem. See, listen. US isn't facing problem at a country level because it produces its own oil. Right? There is a term of trade adjustment that the oil producers are benefiting at the cost of the ones who are consumers. We as a country are facing problem because we are actually debiting our account and creating UAE's and Russian account. So as a country we have to internally divide that $100 billion bill has to be sent. You have to be sent some bills, and government has to be sent, corporate have to be sent. As you said correctly, all of them, we all will have to co-share it. All of us to. So austerity that he is talking of every time, I do not turn up here, I will not go and have coffee downstairs. And to that extent, the coffee walas actually volume will drop. So in a sense, all of this actually is everything. See, there is no free lunch here now. Mr. Modi is actually telling that no, we are in a little bit of a stress right now. Let's shape up a little bit. Now this has some cost. So the growth will get knocked off by 1.5%. Currency has gotten knocked off already to a certain extent. Interest rates have risen from 6.20, 30 to 7%. WPI is 8%, therefore margins will get knocked off. All of us are bearing some price.
Do you think that the prices currently reflect that? Sorry, Hiral, you want to comment?
Continue.
Do you think the prices reflect that? In that, generally you say when this kind of fear is there, it should reflect in the prices. Do you see fear in the market right now?
Which price?
In equity markets.
Currency showing
in equity markets.
Currency, see, the thing is, listen, you can have, in the end, if let's say, if the currency blow up by another $10, okay, the equity is a nominal, real asset actually, not nominal, real asset. So earnings are going to, in dollar terms, are dropping. the equity indices are dropping every day in dollar terms, but we can preserve in INR terms by letting the currency go. So that is what is happening. So from a foreigner standpoint, India is a clumsy asset right now because in dollar terms, he's not made any return in last 4-5 years, right? But we can be happy that हमारा Nifty choice पे है, because we are actually all investors in INR terms. Now, government has to ensure that you don't have option B to invest abroad, which is why LRS constraints will come. Government will have to ensure that you don't travel to Vietnam. So therefore, the travel restrictions will come. Government will ensure that you don't buy gold. Modi ji said that don't buy gold so much for 1 year because we are buying $70 billion of gold every year. So we need to spend less on gold. So we can preserve. The thing is that even though it compares well with 2013, our internal macro is far better than 2013. External macro is as bad, I have to admit. But why we are not a fragile 5 economy today is only because our fiscal is all right, inflation has behaved well, government has had a decent policy so far. So which is why we are not blowing up. We are not one of those fragile 5 countries.
So basically, little bit of austerity is something that will give us that levy to stay where we are right now.
Yes.
And to add to that,
hopefully this saga ends.
Probably.
Hopefully in 90 days this saga ends.
To add to that, an interesting point that you made is that our chat GPT movement is something which has not worked in our favor as well when you started off. I want to talk to you about that. How are you looking at it? Because people are talking about AI coming in as a benefit to a lot of corporates as well, where we'll save money. But I think the way it's panning out right now is where it will be a phase where we will be constantly investing. And maybe in the next 2 to 3 years or 4 years down the line is where we will actually start getting the benefits out of it. In that kind of a scenario as well, do you think that is something which is also pushing dollars out of the country?
No. Investing, no. Spending. So every time you use a Claude $20 subscription, you're paying to someone out there.
Correct.
That's not investment. You may consider this as investment, but as a country, we are spending.
It's spending.
It's exactly like oil. So basically, now to process data, we are paying someone out there in New York or wherever he is. Okay. So to that extent, even though at NDTV or my firm may be better off today because our accounting, taxation, audit, everything is being done by all these chatbots. But at a country level, we are worse off because we are using the Claude to displace a man who otherwise could have actually come and done his job. So basically at an aggregate level, think of it like that. Think of it as a country, we are worse off because of ChatGPT. Because we don't have the frontier, just a second, we don't have a frontier lab. But as users of ChatGPT, you and I are substantially better off. So how paradox it sounds, that how can ChatGPT be bad for India even when it is so good for me? So ChatGPT is creating a substantial consumer surplus in all our lives, right? We can get right solutions without calling our doctor, without calling our accountant. But somehow, paradoxically, it is worse for the country at least at the first order level. Eventually, most probably, I have been arguing that India also will be great beneficiary of all of this. But right now, as it stands, we are net losers.
Sure.
So at the point when we start building our businesses and growing because of it, that's when we become beneficiaries as well.
Yeah, when on the infra layer, there comes a lot of global demand to build applications. Okay. That time, hopefully, our these tech guys will actually come forward and say that we'll deploy for you.
Hopefully, I like the word hopefully.
No, we will. I am not pessimistic on India tech.
You're not pessimistic on Indian
IT? I just do not buy this idea of this clumsy idea that India has completely lost the. No, it is a frontier lab. Yeah. It is a frontier tech. We don't have capacity. We are a relatively poorer country. We don't have capacity to build frontier models. But we are absolutely phenomenal in actually building the application layer on top of it, which we will do. But this is not our time right now.
Apna time aayega.
We will build all of this for the world.
Yeah. Okay. So just the numbers that I've heard coming from Manish Dangi, I heard 110.
in context of the rupee. All of this was possibly at
No, I'm only making that if it were to be $110. No, I'm not saying $110.
90 days for the war could end for the war. And I heard 1.5% hit to GDP. I also heard in some other reference, 3% rise in interest rates. All in different references. Are any of these possible situations?
Do not say anything on camera. Like such bombastic comments as I've learned.
I'm ChatGPTing all your comments. This is the executive summary of all of your comments. Don't worry, Manish. No one will hear you.
Okay, my point is that I don't think, okay, just to contextualize, step by step, I don't think currency is going to bleed meaningfully from here. Okay, that's number one. So right now I'm nullifying your
10 rupee comment.
10 rupee comment. I don't think Indian macro deserves a 3% lift in interest rates. I think the solution to India macro and the trouble that we are in is a capital solution. We don't have to slow the growth dramatically. I think RBI and the mandarins there understand that we need to bring dollars in some form or other. Okay, relying on crude to drop to save some money or FIA equity to come in it's a fool's paradise. Right now, we need to get some bond solution out, which is through FCNR, which is coming in a month's time, anytime. It's going to come, and a large amount of 30, 40, $50 billion will come because of this, and this will sell to a certain extent currency. So beware of shorting INR right now. I would just the opposite of what you suggested. Beware of shorting INR, but I'm also simultaneously telling that there's no free lunch here. The austerity, the FCNR, all of that has some price tag. We're paying. Some of it will come in form of higher CPI. Some of it will come in actually maybe the bond sort of rising a little bit more. But I don't think the solution this time is like 2013 where you'll have to have a knee-jerk 3% rate hike. I don't think you're going to head to rate hikes right now. But idhar-udhar, chota-mota, we'll do lots of things to ensure that things get solved, but growth will take a little bit of a hit. So don't think that no margins, don't ask the next guy in the next show that aapka margin kam kyun hua hai. This is par for the course.
Okay, wo to hone hi wala hai. The one and only Manish Dangi, no one can summarize it like him. And give ChatGPT a run for his money. Thank you so much for coming in on the Editor's Cut today. It's been a fantastic show. That's all the time we have. So thank you for joining us. Tell us what you want to see on this show next, guys, and what you want us to discuss. We'll see you back here, same time next week. You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you pivoted to vegetarian burgers.
When we started the Mithai brand, again it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the chaat factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and my first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se hone, right? A burger is basically...
It's like veg biryani.
Veg biryani.
Why is Jumbo King not only about vada pavs anymore?
Vada pav is a Mumbai product. Within Mumbai, this was like the poor man's food or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that isme sona chandi thodi dala hai. Why should I pay more than this?
How many people told you कि MBA करके आप वड़ा पाव बेच रहे हो?
My friends used to joke around, tell us the truth. You've been disowned by the family. You're not telling us that. We have a family business. And I told my dad I don't want to join the family business. When Jumbo King started, it was seed capital of only 2 lakh rupees, which I borrowed from my dad. I said I don't need money because I had burnt about 55 lakhs in the mithai business.
Ouch.
excellence measured by those who built it. Presenting the jury of the NDTV Profit Business Leadership Awards. Sunil Bharti Mittal, Chairman of the jury. Founder and Chairman, Bharti Enterprises. Noel Naval Tata, Chairman, Tata Trusts. UK Sinha, former Chairman, SEBI. Kiran Mazumdar Shaw, Chairperson, Biocon Group. C.S. Sethi, Chairperson, SBI. Jayant Sinha, former Union Minister of Finance and Civil Aviation. Ramesh Damani, Value Investor and member of BSE. Cyril Shroff, Managing Partner, Cyril Amarchand Mangaldas. NDTV Profit Business Leadership Awards. Honoring excellence. Coming soon. India's unshakable news habit. NDTV.com is India's #1 English news website.
Hi, I'm Tamanna Inamdar. Watch me on NDTV Profit, where I break down the day's biggest business stories. What happened, why it matters, and what it means for your money.
Hi, I'm Neeraj Shah.
Fuel prices jump at the pump, spelling trouble for households with petrol and diesel prices hiked by 3 rupees per litre. This is the first hike in petrol diesel since April 2022, with premium variants of both petrol and diesel also climbing higher. Petrol cost surges really hit daily commuters. NDTV Profit checks the pulse of people after fuel price hike. Citizens' voices from metro cities on NDTV Profit. US President Donald Trump says Xi Jinping likes the idea of buying US oil. Both leaders discuss Iran and opening of Hormuz. Trump calls the China visit incredible, with major trade wins and a very strong personal bond with Xi Jinping. On the sidelines of BRICS summit, our MEA S. Jaishankar as well as Iran's Foreign Minister Abbas Araghchi hold bilateral talks in Delhi and discuss the situation in West Asia and its implications. Big boost for UAE-India ties, major investment push during Prime Minister's UAE visit, and MOUs signed including strategic petroleum reserves and supply of LPG, while UAE announces $5 billion of investment. Market slipped sharply in the last hour of trade. Nifty snaps the 2-week winning streak, down by 2% for the week. Nifty closes at 93,643 levels. Another day, another record low for the currency. Rupee ends near its fresh record low of 96 rupees 14 paise on Friday. Big relief coming in for Adani Group. Settles the US SEC civil complaint with a request for a final judgment. All eyes on the US court order that could drop charges against Adani later this week. Walmart-backed Flipkart's IPO plans may be pushed further, with sources indicating a delay in its listing timeline. Flipkart will likely target a 2026 IPO. Major boost to indigenous defence manufacturing. Defence Minister Rajnath Singh and Andhra Chief Minister Chandrababu Naidu lay foundation for 16,000 crore rupees of fighter jet infra project. Government's first response on NEET exam leak. Education Minister Dharmendra Pradhan says will fix the existing loopholes in NTA exam to be fully computer-based from next year, and NEET re-examination to be held on 21st of June.
Hello and welcome. You've tuned into Profit 360. I'm Nisha Poddar. Let's take you through all the top headlines and the important developments of the day. Starting with the fuel prices, they are up across metro cities in India. Mumbai, Delhi, Chennai, Kolkata, prices of petrol and diesel have increased by roughly 3 rupees per litre everywhere. This marks the first increase since April 2022. Now, the prices of CNG have also been hiked by 2 rupees per kilogram, raising the bill to 84 rupees per kg in Mumbai. But according to the top government sources, this hike really could have been much steeper. Officials say that India is currently absorbing a massive global oil shock instead of fully passing it on to the consumers. Now, sources claim that oil marketing companies and the government together are really taking a hit of nearly 1,000 crore rupees every single day on account of their oil bill. Now, the government believes a full pass-through of global crude prices could have led to fuel prices rising by 200 to 300%, but doing that is economically and politically not feasible. So the focus instead is right now on reducing the fuel consumption rather than burdening the consumers further. My colleague Shrimi joins in with more details from the government sources. Shrimi, tell us.
See, the government's message amid the global oil crisis is becoming increasingly clear. It does not want consumers to bear the full burden of rising crude prices through steep fuel price hike, and that is quite reflected in today's move. And according to top government sources, oil marketing companies along with the center are currently absorbing losses of nearly 1,000 crore every day to keep petrol and diesel prices stable despite the surge in global crude prices. Now, under recoveries are estimated around 26 per litre on petrol and nearly 82 per litre on diesel. Officials argue that the alternative would be far more painful. Since fuel demand in India remains largely price inelastic, consumer would need petrol and diesel even if price rises sharply. Internal estimates suggest that the fully passing on the global shock could require fuel price hike of as much as 200 to 300%, and that's huge. Now, sources says that government believe that any knee-jerk move would hurt the bottom of the pyramid the most. Instead, the focus is on reducing fuel consumption volume rather than sharply increasing the prices. Officials describe the current situation as a massive twin drain, with crude import costing 12 to 15 lakh crore annually, while gold import have surged to 6 lakh crore. Sources also says that the government is framing the current situation as an external geopolitical shock linked to the Iran conflict rather than any sort of domestic economic failure. Now, this also explains clearly the PM repeated calls for restraint in fuel consumption, foreign travel, gold purchases, etc., which sources describe as highly targeted and pragmatic steps to sort of reduce the dollar outflows with minimal economic disruptions.
All right, Shrimi, thanks so much for getting us all those details. Yes, it is a precarious situation with oil prices going above and beyond the means of the people, and a small price hike definitely has been implemented. Now, the petrol cost surge hits the daily commuters, and remember, NDTV Profit checks the pulse of people after the fuel price hike from metro cities. First, let's take a look at this report coming in from the city of Bengaluru.
Petrol and diesel prices have hiked here in IT city Bengaluru as well. In fact, we are right now on St. Mark's Road's petrol bunk, and many of course continue to come here because it's something that's a part of daily life. Sir, petrol और डीजल के दाम जो है वो बढ़ चुके हैं. आम जनता के लिए क्या challenges है यहाँ पर?
ये तो बहुत ये है ना, दिक्कत की बात है. पेट्रोल का रेट, एक तो बिजनेस नहीं चल रहा है बराबर, हर तरह से तकलीफ ही है. फिर ऊपर से पेट्रोल का रेट बढ़ा दें तो और तो जनता के लिए तकलीफ ही की बात है ना. तो फायदे की बात तो है नहीं, तो नुकसान की बात है.
तो आपकी क्या अपील है अभी?
पेट्रोल का रेट और कम होना चाहिए, जैसा कि अभी तो और बढ़ाते ही जा रहे हैं हर जगह. गैस की महंगा हो गया, जैसे कि भी नॉर्मल गैस.
देखिए कि ग्लोबल सिनेरियो जो है वो वॉर चल रहा है. वॉर के कारण जो है ये वाला सिचुएशन यहाँ पर आया है दरअसल. तो काफ़ी सारे लोग बोल रहे हैं कि हमें समझ में आता है कि ग्लोबल सिनेरियो अब की बार जो है वो कुछ इस तरीके से है, क्योंकि वॉर चल रहा है तो ऑप्शन नहीं है सरकार के पास भी.
ऑप्शन तो बनाना पड़ेगा ना, जिम्मेदारी तो उनकी है ना, जनता के लिए.
All right, and a major relief for the aviation sector amid the ongoing West Asia crisis. The Maharashtra government has slashed VAT on aviation turbine fuel, or ATF, which is used as fuel in the airlines, from 18% to 7% with immediate effect. This will give a lot of relief to the airlines. Civil Aviation Minister Ram Mohan Naidu welcomed the move, saying that the aviation industry is currently grappling with airspace closure, operational uncertainty and rising ATF prices. Danish joins in with more on the impact of this decision on the industry. Danish, some relief coming in.
Well, that's correct. Some relief is definitely coming in for the airlines, as Maharashtra government has reduced VAT on ATF by 11% from 17% to 8%. But if we talk about the overall relief that is still needed for the airlines, probably if only one state has reduced VAT on ATF, that will not help the airlines a lot. But this is a welcome move, and considering that Maharashtra and especially the Mumbai airport is the second largest airport in India in terms of volume and daily flights. So in terms of that, the airlines will definitely get a little bit of relief. They can go to Maharashtra, park their planes over there, get their refueling done. So this might be the advantage that the Maharashtra-based airports might get. But if we talk about the other big states and like UT, like Delhi, Delhi still charges a 25% VAT on ATF. Similarly, Tamil Nadu still continues to charge 29% VAT on ATF, and even West Bengal, it is charging 25% VAT on ATF. So although it is a slight relief, but the government might have to talk more to the state governments to reduce the VAT on ATF in other states as well. In fact, way back in March, NDTV Profit reported that the Union Civil Aviation Minister Kinjarapu Ram Mohan Naidu has written to several states and has requested many states to reduce VAT on ATF, and we are seeing that almost 2 months after that, at least one state, Maharashtra, has agreed to reduce ATF. In terms of advantages, what will be there for the airlines? They will get another option of a state which is charging less VAT on ATF, so they can get their refueling done. But then we'll have to wait and watch what kind of aircraft movement will be at Maharashtra, considering that this is a very uncertain time. The ATF prices are skyrocketing. But from a big point of view, this is a welcome move, and we'll have to wait and watch whether other states follow this or not.
All right, thank you so much, Danish, for putting all that into perspective. And of course, fuel price hike also really impacts the people of the country. In fact, Mumbai too has been hit by the hike in fuel prices. Let's take a look at what the computers are saying in the commercial capital of India.
The price hike is likely to worsen the condition of commuters as far as the travel cost is concerned, is what they tell us. At present, we are here in Andheri, and like you said, the petrol pump, people though are coming. However, the prices today have changed. Earlier, it was 103 rupees per litre, and today it has gone up sharply by 106 rupees per litre, whereas yesterday it was 103 rupees. जो रोजाना बाइक से सफर करते हैं और इनका कहना है कि इसका असर उन्हें जरूर पड़ेगा. आप भी रोज बाइक से सफर करते हैं?
हमारा रोज बाइक रोज
और रोज कितने लीटर पेट्रोल लग जाते हैं?
रोज हमको जाता है 1-2 लीटर पेट्रोल जाता है.
2 लीटर पेट्रोल, यानी हर दिन आपका जो है अब 6-7 रुपए आपका खर्च और बढ़ गया.
6-7 रुपए बढ़ गया.
हाँ, क्या बोलेंगे, लेकिन पेट्रोल का दाम बढ़ते जा रहा है.
क्या अभी और कितना बढ़ेगा आगे पता नहीं. ये तो 3 रुपए ही बढ़ा है.
हाँ, अभी और बढ़ना चाहिए था क्या?
पब्लिक तो बोलती और बढ़ेगा, हम तो सोचते हैं कि नहीं बढ़ना चाहिए.
आप सोच रहे नहीं बढ़ना चाहिए. तो यानी आप लोगों को तैयार रहना पड़ेगा, कभी भी प्राइस
कभी भी प्राइस बढ़ सकता है, कुछ नहीं बोल सकते.
India's trade deficit widened in the month of April due to the rising import costs. Now, the overall exports in April jumped to nearly $81 billion from $71 billion a year ago. But the imports also increased, especially due to the higher gold purchases. In fact, my colleague Rishabh is right here with a lot more details on the key trends and updates on FTAs with US and UK as well as trade data. Tell us, Rishabh.
Absolutely. Let me break this into three parts. The first part is, of course, the trade data that has come in. The overall goods exports as well as services stand at roughly $80.8 billion. That's what we're picking up. That's roughly a 13% uptick over April of 2025. What we're seeing is that the trade deficit has also widened just a bit. That is also thanks to the import number that has also gone up. What we're also seeing in terms of services exports is that it is also continuing to grow at a healthy 13 to 14% rate. So we're seeing exports still on a good footing despite all the uncertainty that's happening globally. The US remains India's top export destination, while China is the top import source currently for India. Now on to part two. There was some very interesting commentary as well as trends that were identified by the Commerce Secretary. Number one, of course, being the elephant in the room, the oil prices that have gone up. What the Secretary said is that currently he's not seeing that the oil prices are hurting India's export competitiveness. He's also saying that whatever he's seen in May so far, early May, those numbers have also been very encouraging. So far, oil is not playing a dampener to India's exports. What he also said on the gold imports, but remember, there was a lot of chatter on how gold imports might increase because of the UAE trade deal that has happened. There's a tariff rate quota and there's some sort of an arbitrage in terms of gold imports that importers are able to use. So far, he said that he's not seen any worries on that, and the DGFT has also acted upon better monitoring. Apart from that, he's also said that the duty hike in terms of gold imports is actually going to improve revenues for the government. So that's an important one. He also highlighted the fact that in West Asia, the exports have declined from India roughly 28%. So West Asia continuing to be a challenging geography for Indian exporters. Lastly, the India FTAs. You have the UK FTA that has the operationalization of which is delayed. We've been hearing for months that by May end it will be operationalized, but it has not been. And in fact, sticking points have come up, especially with regards to UK steel policies. The UK has decided to cut by 60% its tariff-free steel imports, and that is going to impact India. So both sides are working on a creative solution on that. On the US front, a trade delegation from US is expected to visit in June. The dates are not confirmed yet, but that's likely to be the next step in the India-US trade talks journey. So that's what we had from the monthly trade data briefing.
All right, Rishabh, thank you so much for all the details coming in on the trade front. All right, US President Donald Trump says that Chinese President Xi Jinping is open to increasing purchases of American oil, as the two leaders held wide-ranging talks focused on trade, energy, security, and also escalating tensions in West Asia. Now, Trump said that both the sides discussed Iran and the need to keep the Strait of Hormuz open, which is, remember, a critical artery for global energy supplies. Now, Trump has wrapped up his high-profile Beijing visit, calling it incredible, and also claiming the two countries had reached fantastic trade deals. That would also benefit both the economies. He also spoke about sharing a very strong personal relationship with Xi Jinping. In fact, Xi Jinping described this particular visit as a milestone and said that China and the United States were building a relationship of constructive strategic stability. However, sensitive issues such as Taiwan tariff and technology restrictions continue to remain the major points of friction between Washington and Beijing. Here's what Trump said after his meeting with Chinese President Xi Jinping in Beijing.
We did discuss Iran. We feel very similar to Iran. We want that to end. We don't want them to have a nuclear weapon. We want the straits open. We're closing it now. They closed it, then we closed it on top of them. But we want the straits open, and we want them to get it ended because it's a crazy thing. They're a little bit crazy. When it's no good, can't have it. They cannot have a nuclear weapon.
All right, Prime Minister Narendra Modi has kicked off a major five-nation foreign tour aimed at deepening India's strategic and economic ties at a time of global uncertainty. Now, the visit covers the United Arab Emirates, Netherlands, Sweden, Norway, and Italy. Now, the first stop is the UAE, where energy security, trade, and regional tensions in West Asia are expected to dominate the discussions. In fact, today, during the talks with UAE President Sheikh Mohammed, Prime Minister Narendra Modi reaffirmed India's commitment to regional stability. He said it is important that Hormuz remains free and open. Listen in.
ब्रदर, पश्चिम एशिया क्षेत्र में युद्ध की परिस्थिति का प्रभाव आज पूरे विश्व पर दिखाई दे रहा है। भारत ने हमेशा समस्याओं के समाधान के लिए डायलॉग और डिप्लोमेसी को प्राथमिकता दी है। होर्मुज़ को फ्री, ओपन और सेफ बनाए रखना ये हमारी सबसे बड़ी प्राथमिकता है। इस विषय में अंतर्राष्ट्रीय कानूनों का पालन आवश्यक है। ब्रदर, भारत हर परिस्थिति में यूएन के साथ कंधे से कंधा मिलाकर खड़ा है और आगे भी खड़ा रहेगा।
All right, so those were the discussions. Now let's take it to a market roundup for the week. And markets today ended largely in the red, with benchmark indices really settling 0.2% lower, so marginally lower. And this week, the Lal Street has really hit with various actions like rise in gold import duties, Trump-Xi Jinping meeting, BRICS summit in New Delhi, and also increase in petrol and diesel prices, not to forget the sugar export being banned. And therefore, the market closed mixed and weak, also digesting a lot of these macro factors impacting the economy. Even the rupee today hit its record low, all-time low, which breached 96 to the dollar, sinking to those levels for the first time ever, although it later recovered a bit to 95 rupees 97 paise against the dollar. It still touched a new record closing low today, and it is, in fact, has been declining by 6.6% this year so far, making it the worst Asian currency. All right, let's take it straight to another important corporate development of the day that we are tracking right here on NDTV Profit. Big relief coming in for Adani Group as they have really settled the US Securities and Exchange Commission civil complaint. We have Nimit joining in with all the details, development and what it means for the group. Nimit.
Yes, absolutely. So the US Securities and Exchange Commission and Gautam Adani and Sagar Adani have by consent agreed to settle their long-standing case in the New York Federal Eastern District Court. Now, as you can see, this is the court case that has been going on for a little while. It is a by consent agreement to settle this case. Now, if you can see, the final judgment has been proposed to the court now, and this is a standard procedure whereby once parties agree to settle, they will file their proposed judgments with the court, and then the court will finally agree to that, which is again standard procedure. Important thing to note, and again very standard, is that this has been done by consent, which means without admitting or denying any allegations. There has been no question on the merits of this case. This has simply been settled before that process. Lastly, important to note that there's an 18 million civil penalty, and this has not been imposed, but this has again been agreed to. 6 million on Gautam Adani and 12 million on Sagar Adani. A final judgment is now awaited from the court, and once that final judgment based on the proposed judgment sent by the SEC and Gautam and Sagar Adani is done, we will close out this case.
All right, with that, we've come to a wrap on this Friday afternoon on this edition of Profit 360. But do keep it with NDTV Profit. Thank you so much for tuning in.
You're a Malad boy. You started by trying to do something with sweets, pivoted to chaat, then pivoted to vada pav, then you've pivoted to vegetarian burgers.
When we started the Mithai brand, again, it was a little too ahead of its time. Chaat never happened. We just called, Jumbo King was called the chaat factory for some reason. I love the name. I started with one store of 50 square feet. We are fully vegetarian, and My first reaction when we did vegetarian burgers, when we pivoted, they said burgers vegetarian kab se honge?" Right? A burger is basically
It's like veg biryani.
veg biryani.
Why is Jammu King not only about vada paos anymore?
Vada pav is a Mumbai product. Within Mumbai, this was like the poor man's food or the my struggle ke days ka sathi. There is a problem in the name vada pav. The moment you call it vada pav, you can't charge more than 20 rupees. People will say that इसमें सोना चांदी थोड़ी डाला है. Why should I pay more than this?
How many people told you कि MBA करके आप vada pav बेच?
Hello and welcome to KYC. I am Sharad Dubey and you are watching NDTV Profit. This is the show where I get you the hottest companies with good news flows. And right now earnings season is also on. So I am picking a company where a good set of earnings have come. But I'm not going to give you the company's name so fast. Try to guess it. It's easy for you. It's a Navratna CPSE registered company as an NBFC IFC. That means this is a public sector company. Of course, it's a rare chance to get that in KYC, but we have got this for you because the company has delivered a strong quarterly numbers. And did you know in the last 5 years, the company has given 5 times return. That is where my interest has come in. Market cap zyada hai, but try to guess which company I'm talking about. The company in focus is Hoodco. That's the company which we talk about, and what are the key details about it we'll try to understand. But why are we calling this company? It's a large company, but there is a lot of interest in it, and that is why I've got this company. First and foremost, the numbers have been strong. Will this momentum continue in the first quarter? That's the first question to be asked. The second question, FY27 outlook. लोन डिसबर्समेंट्स क्या रहेगा, AUM की क्या टारगेट है, वो सारे डिटेल्स हम यहाँ लेके आएंगे. Also NIM's guidance, is it under a little bit pressure? Is it going to bottom out from here or will the NIMs remain under stress? Also the AUM shifting, is it shifting towards the high yield products? If yes, will the operational numbers change? The profile of the company, will that change or not? The key recovery expectations coming in the coming quarter. बहुत सारे cases में, बहुत सारे tribunals में पैसे फंसे रहते, तो किस तरह वापस आता है? So just to put that in perspective, and the key growth triggers, especially for urban invest window, the public-private partnership project finance and the bridge loan. These are the new venues of growth for the company, and the signing of the large MOUs, especially with the state governments. What are the key progress looking like? And if the management can share some numbers with us. So these are the key questions we'll be asking the management. And joining us, we'll have Sanjay Kulshrestha. He's the chairman and MD of Hoodco, where he'll answer all our queries. But apart from this, let's talk about the company. ये company करती क्या है? When you speak about Hoodco, it's largely a financing company, but it does, of course, it is a Navratna. It's a high status Navratna, and when you are a Navratna, your cost of borrowing becomes lower. We have seen that in PFC, RAC, IREDA as well. It's a public financial institution providing consultancy and capacity building support. And of course, the financing is one of the major aspects of it, and this is the entire landscape. You know, जब घर आता है या infra बनता है, be it public or private, that is where they come in. But remember, most of the loans they are giving is to the government entities itself. Also, let's look at the other key reasons where the government initiatives is something which Hoodco should be in focus on. We have PMA 2.0, Smart City, Amrut, Swachh Bharat, and even Jal Jeevan Mission. So इन सारे initiatives को जो funding आती है, वो ये company भी करती है. Hoodco is known for that. Also, let's talk about the other key aspects. 99% of portfolio is for the government, central ho ya state ho. This is where it matters. Apart from these numbers, if you look at it, the overall loan portfolio that stands at almost 1.162 lakh crore rupees, you know, going ahead, and they are targeting for FY30 almost 3 lakh crore. But how the loan portfolio actually comes in, the urban infra, that is 89% of it, and of course the usual affordable housing is still 11%. So 89% of the loan is still in the urban infra segment. Apart from this loan portfolio, let's see how the dividend payout ratio has come out. This is a very interesting data which was shared by the company. In FY23, there was around 38.5% of the dividend payout ratio. But look at it, for the shareholders, and generally PSU companies dividend dete hain, and now it's at the higher side. So that is a good signal for this dividend payout ratio. Return on assets, I've just taken FY25-26. There's a minor, downtick coming in here, but largely it is very stable. ROC also, the story remains the same, and this is what the numbers are looking like. Also, apart from these numbers which are there, the operational indicators, this is very much important to have a look. The cost of funds that has actually come down, और ये बेहतर होता है जब आप एक फाइनेंसिंग कंपनी होती है और आपका जो cost of funds है वो कम होता है, then your spreads or yields actually become much better. Interest spreads have a slight decline is there, and the pressure which I was talking about, the net interest margin, it was 3.22% in FY25, and in FY26 it's down to 2.91%. So this is where the fall has happened. This is something you should be looking out for. So it's a neutral rating, but there are some key triggers also you should be looking at. The company has strong return, operational and credit ratios. This is to simplify it for you for your analysis. The NIM compression is definitely there. So we'll try to ask the management, is the worst over? Apart from this also, there are a couple of triggers you should know. There's a strong growth outlook for both AUM and the disbursement. So these are all, of course, the operational numbers which you should be tracking, but the trigger is positive. And the Urban Challenge Fund, that's around 1 lakh crore rupees for the next 5 years. That is something to look at. And also the city economic region and the bridge loans. These are the emerging areas where the focus is coming. So net, these are the positive triggers coming in for Hoodco. But let's try to understand in the KYC segment, what are the key parameters where we judge the company. And this time remember, ये एक financing company है, तो parameters change हुए हैं. There is income statement, there is of course operational parameters. I have of course not kept the balance sheet because generally these companies balance sheet is very stable. So आपको कुछ ज़्यादा नहीं सीखने मिलेगा, लेकिन ज़्यादा कहाँ से सीखने मिलेगा, ये नए ratios से. That's why I have tweaked it. Cost of borrowing is there, asset quality is there. These four is something which is main for the numbers, but apart from that, our usual parameters are there. Shareholding, it's largely 75% owned by the government. There's no major sell-off there, so it's very stable. Street cred, we'll try to understand how much return has been made, and of course on the long-term basis also we'll try to figure out. Valuations, we'll have a 5-year view on it. Average and peak numbers we'll talk about, and of course the outlook, very much important going ahead. What are the key numbers to watch out for, and where is the direction going for the company? We will be focusing on that. But let's talk about the first rating parameter, and that's the income statement. And largely we see the interest income and PAT, these numbers have improved. Okay, we have done it in FY24, 25, 26. So while you're looking at the screen, you should be looking down from top to bottom, and this is where the growth is coming. Interest income and even PAT, that has almost doubled up in last 2 years itself. So good strength is coming in, and I had explained you that the Q4 numbers were also on the stronger side. So net, the income statement is looking strong. So I'm going to give this a strong thumbs up. Let's talk about the operational parameters, how things change. And यहाँ पे loan sanction और disbursement बहुत important होता है ना. Over here also, while you're studying, see from top, then come down. Look at that, this has almost doubled up the loan sanction. So that is, we are seeing, a good momentum happening. And for loan disbursements also, this has gone up almost 3 times. So loan disbursement 3 times, loan sanction 2 times. That is where we are seeing a good operational parameter jump as well. But net, let's give this a neutral rating right now, because this is the entire, you could say, the business cycle of it. So अब धीरे-धीरे करके आप business समझने लगे हैं KYC में इस PSU के ऊपर. But what's the third category? That's also important, and this is the overall cost of borrowings. This is very much important. This was 7.44%, and because it is having a good strong credit rating and it's a Navratna, the cost of borrowing keeps coming down, and this is what we had explained you, and this augurs well for a lot of financing companies which are there from the government, and that is why I'm going to give this a strong thumbs up as well. But moving on, the incremental cost of borrowing, that has also come down. So that's what we are going to talk about. But one thing is important is the next one. That's the asset quality. This is very much important when you are judging a company in the financing space, and lower this ratio, it is better it is. So look at that in FY24. This went up to almost 3%, but then there was a fall happening. FY25, 1.7, और अभी का ratio देखें तो just 1. This is the GNPA ratios. Let's talk about the NNPA ratio. The story remains the same. It's largely, you could say, the net NPA ratio is almost zero. That means asset quality is quite strong. Recoveries are definitely a question to be asked, but the asset quality में company को अव्वल नंबर मिलता है, and that's why I'm going to give this a strong thumbs up as well. Apart from this, let's talk about the street cred. The shareholding, and that's something we'll talk about. I had mentioned you earlier that 75% of the stake is by the government of India. So promoter hai government of India, and interestingly, it's under the name of the President of India. This is just a did you know for you. FIs, DIs, let's look at how things have moved. FIs haven't moved much, and neither the DIs. It's very strengthened, you could say, very important kind of announcement is definitely there that there is no major change happening. And remember, in the DIs, 7% stake is held by LIC. Public also, nothing has moved much. So I'm going to give this a neutral rating right now because कोई change ही नहीं हुआ है. Let's also talk about street cred, how things have moved. And I mentioned you earlier and I teased you also that the stock has given 5 times return in the last 5 years. That's a multi-bagger for you. Congratulations if you're holding that. But from the March lows itself also we have a look. The stock is up almost 40%. एक साल के लिए आपने अगर स्टॉक को रखा है तो फ्लैट है. Overall, if you are a mid-term investor or even a long-term investor, congratulations, you have made money in this stock. But let's give it more time because the last 1 year the stock has been flat, and if you are doing the technicals of it, you can see on a monthly basis the stock hasn't given much of a breakout. So it's a neutral rating when it comes to the street cred. Let's go for the valuations. The valuations I'm tracking is the 12-month forward price to book ratio, and let's look at it how things have panned out. पिछले 5 साल का peak में देखें तो it was 3.4 times, and currently the current levels as well as the 5-year average levels, they are full side by side, largely flattish, almost 2 you can talk about. So there isn't much value left. It's very in line with its average, so it's not very cheap also, neither it's very expensive also. And when this situation happens, I give a neutral rating to the valuations. Let's talk about outlook, and that is where I feel there is some alpha to be made. They are targeting 3 lakh crore balance sheet by FY30. Right now they're halfway there. 1.61 lakh crore has been achieved yet. Also, the second outlook to look is the strong growth outlook for the loan disbursements. That is where the bullishness is coming from the management in their investor presentation. Also, they're targeting zero net NPA, and हमने आपको दिखा भी दिया था कि net NPA has largely reached that levels as well. They're strengthening the international borrowing and partnerships as well. They have a lot of borrowings from, you could say, from the Japanese segments as well, where the cost of interest is on the lower side. Remember, a company like this makes money when their cost of interest is less and they give it out at the market rates, and that is where they earn their spreads. Now they're raising funds through Section 54 EC capital gains bond, and remember there's a tax exemption at play here, and that is what we are seeing the entire picture. So net the outlook is positive, but let's see ratings क्या है इस company के बारे में. Of course, this is a proper regulated organization, but we'll try to figure out, what are the standout ratings in our KYC show. Income statement, Q4 numbers were pretty strong. Operational parameters were very decent, but of course that NIM segment is there. That is where a little pressure is there, and that is why I've given this a neutral rating. But be it cost of borrowing or even asset quality, that is A class, and because of that I have given a strong thumbs up. Shareholding, there isn't much change happening. It's a government-owned company. And street cred, of course, for medium-term investors, it's been flat. Short-term investors, it has done well from the March lows, and for the last 5 years, it's been a multi-bag of 5 times returns coming in. So I've given a neutral rating there. Valuations in line with their 5-year average price to book ratio. And lastly, the outlook, that is where the street is getting bullish. So total KYC rating क्या है? Let's talk about that. That is 6 out of 8. I'm talking about, and it's largely on the higher side of the average numbers we generally give for a company. But to understand more, we'll try to have a chat with the management. Sanjay Kulshrestha, he's the CMD of Hoodco. He will be joining us. An interesting snippet about him. He has been the CMD since October 2023 with more than 17 years of, you could say, experience. Actually, 3 decades of experience coming in infra power generation and more than 17 years as an experienced professional in REC as well. REC भी एक जो है PSU है. Now he's taking that experience and coming in this company as well. But now we are joined in by Sanjay Kulshrestha. He's the chairman and MD at Hoodco, and company has come out with a strong set of Q4 numbers. To start with, what led to this growth, and of course, will this momentum continue in the first quarter as well?
Thank you, Sharath. I think you have done a great analysis, and I was going through the analytical part, and it was very nice to look at the third-party analysis. And thank you so much for inviting me. If you see, the growth of the company is sustaining from last 3 years continually. It is only because of the push of Viksit Bharat from the government of India and the support, not only the financial support which is coming out, not only from the capital expenditure from the budget, but the Urban Challenge Fund, the Amrit, the Swachh Bharat Mission, PMAY, Jal Jeevan Mission, roads, ports, airport, satellite towns. So a lot of policies are in place. Legislative changes, whatever is required, has already been done. Then the reforms and the lot of push is there from the government of India, and it is well accepted by the state governments. And you may have seen that every state is coming with the kind of, say, you can say Swarnim state or Viksit state. That kind of programs are there within the states, and these programs are backed by the projects. And these projects are in entire state, starting from the ULBs, and now the Urban Challenge Fund is there, which have an objective to make the cities livable, to make the cities as a growth hub. So what it means is that we will be identifying the assets within that ULB only, and we will be creating a bankable project. So,
fair enough.
So I think lot of potential is there, lot of headwind is there, and lot of support and acceptance is there.
Sanjay ji, let's talk about a little bit about the internals also. And I was just understanding that NIMS, there seems to be a little bit of pressure here. When do you think will this bottom out, or do you think this will stay?
Yeah, I think we have a philosophy that it's a profit making with a social objective, and we are keeping that objective remain same. We had guided to the market that our NIMs will be between 3 to 3.2%. This time it has just slightly reduced, but it is only because of the pace of the growth. We are growing at around 28-29% in the loan book. Our loan book is doubled in last 3 years. So whenever such kind of growth comes to any of the organization, any of the financial companies, there is a slight pressure, which is a temporary one in the NIMs. So that has been reflected. But at the same time, as you have also analyzed, we had been able to cut down our cost of funds. So it's a temporary phenomenon. It will be rest at around 3 to 3.2%. And I think from next quarter, you may see such kind of changes.
Right. That means from the next quarter itself, NIMs are expected to bottom out. That's an interesting take coming in. But loan disbursements and AUM, over here itself, if you look at it, there has been a good up move in the last 3 years. We have shown that in KYC with all our analysis. But what's the outlook ahead going like? For FY30, you have given a target of 1 lakh crore. Is there any other targets which are there long-term basis for Hoodco?
So for FY30, the target is 3 lakh crores. We are presently at 1.6 lakh crores. And if you see the track record also, we are continuously achieving our targets. And with all our homework and with all our sanctions and the implementation of the project and the pace of the project, I am very sure that by 2030, we will be achieving 3 lakh crores of the loan books. So I don't see any issue in that. And second target is the net zero NPA. As you may have rightly pointed out, we are nearing zero, but not zero. But we are trying hard to become exact zero, absolute zero. And we have a pursuit that there will not be any default in the projects that we will be sanctioning. So whatever we are disbursing, so there is no new NPA which is being created. The monitoring is very, very strong. The due diligence is very, very rigid. Then only the sanctioning process is
right. And Sanjay ji, just wanted to understand how the AUM changes. Are you moving towards the high yield products? And if yes, any timelines for it, and what are these products?
Yeah, high yield is there since we are starting the PPP projects also from the 5 sectors. Actually, we had identified these 5 sectors as per the requirement of the states and the